Let's see if we can get this working here without too much trouble. Hello, hello. How are you? I wish it were more promising. Kind of a mixed bag this morning. I'm doing okay. Been a bit of a crazy week. Still haven't heard back on my x-rays. Hopefully it's fine. Yeah, I can see it. Hello from London. I'm not going to start really small, zooming in, so I'm going to be zooming out. So we're not going to go in first. But yeah, you're right. We'll talk about this little local area in a minute. We got to kind of play catch up a little bit. Yeah. Don't worry, it's not a long-winded catch up here. Though there's a lot of noise on this side of the chart, really, it's quite straightforward over here. So, I don't see my chart as a fixture, like something that just stays stagnant, because the chart moves, it's flexible, price action changes, things move around. It's not so much a question for me of can I change my own chart, but there are some things that on the chart like I won't change. Like there's things that are very consistent and need to stay the same. So a lot of times when I look at the if you look at the chart and you think, oh, it looks really different or something, just so you know, it's not really that different. Thanks. Yeah. It's just been a week. There was a lot of pain beginning of the week. So I don't really feel as much pain now, but my foot's all kind of weird colors. And it's still kind of swelling here and there. I've been icing it a lot. I wanted to get an x-ray, but I don't have the results yet. Maybe I fractured something. It wouldn't be like a break. It's not that bad. But it would be like maybe a hairline fracture or something perhaps. And if it's not a fracture, then I just really, I don't know, maybe I bruised my tendons or something. Did something really crazy because I couldn't walk on it for a couple days. It was that bad. So the reason that I didn't stream, you're like, well, you can't walk, so what? You don't need to walk to get on a stream. Well, part of it was because I had like appointments and junk on Tuesday, and Monday was just bad, like real painful, so wasn't comfortable. But I tried to get on, I think it was Wednesday, and it was not great. So I had my setup across the house, and I had to lay down and keep my foot elevated, or sit down and keep my foot elevated, and compressed and then iced and doing all this kind of rotation junk. So I moved my computer, but my microphone isn't easy to move, so I didn't move it. And then I didn't have my mouse. So it was like a lot of weird little things that were problematic. So I did that stream and it was really noisy. And then I just decided yesterday to take a day off and not worry about it. And I had other things I could work on with my setup. So today I moved my setup back and back in the normal spot. At this point, keeping it elevated and icing it isn't really doing anything. It's like kind of at where it's going to be at, I think. So I decided I would not worry about it today. And I'm off the pain meds for now, so should be good. So here's the deal. Okay. This chart, though we've had some back and forth with it, largely the argument has been that this is overall like built out to be a good potential range. And I know that people are still like really angry no matter what happens. So I've been seeing more comments like, hey, it's, you know, it's down to this level you said it wasn't going to be at. Obviously, that's a given. We don't, nobody needs to broadcast that, right? Like we all know, but like, just so you're aware, I didn't think it was going to get down to low fours. I'm not taking back what I said because I still think that 460s was a stronger floor. But ultimately, the spring action, if we want to call it that, the action of pushing down through liquidity demanded something much lower. So hang on just a second. I need to take a phone call. I'm really sorry about this. It could be an emergency. Okay. Yeah, my son's school called. He's not feeling well. So my wife might be taking care of it, but I told him he didn't eat breakfast. My son gets kind of sick when he doesn't eat. So evidently that's what happened. I don't know why he didn't eat breakfast, but he didn't. So there you go. So he may be coming home early today if he doesn't feel good. By about hour and a half from now, they're gonna have an early lunch for him. So, anyways, I don't know. I hope he's okay. I might have to stop abruptly if something goes wrong. So, right now he just says he has a tummy ache. So I don't really know what the protocol is for the school, but I was like, let's take him to the nurse's office and give him something to eat from the breakfast this morning or something. See if it helps, because a lot of times it's all that's wrong with him. So, anyways, so I'm not really in like a position where I'm like sick or anything like that. I'm in a position right now where I injured my foot, so it's not even like a huge deal for streaming. It just wasn't working out for my setup. So that was what that was about this morning. And then I'm going to talk about AMC here, and I got into that, and then I had to take a quick call. So if you're just now joining, this kind of, you haven't missed anything, I guess is what I'm saying. Just kind of warming up here. So right now, AMC's at 418. It came pretty low. It came all the way down to 403 midweek and rebounded a bit. We'll talk about that rebound and what that means. But on the big picture, if you were to go back and you watch a stream from back over here, like let's say in August, and no one's going to do that probably. But if you did do that, what you would see is that I talked about how this basically had finished like an iteration, and that the left side hypothetically could be done, and that we'd be working out the right side. Now the issue is quite simple, okay? It looks complicated because my chart's complicated, but the issue is really, really simple. All right, so I'm going to use this to represent on the left side. I'm going to use this to represent what happened here, okay? And basically, we had an opportunity in this area right here. So you create these little M shapes all the time, and all they are is waves. It's nothing like, again, nothing super complicated. And what that wave is you could think about it like an impulse if you want, like an Elliott wave. The idea of it, a wave trying to break out. That's what I like about Elliott, is it talks about the waves in terms of like jumping creeks. It's like built into the structure of it. And those advances are considered normal, like for the wave. But then sometimes the wave doesn't do that, and it goes and does different patterns. And so they talk about wave patterns a lot in Elliott wave. And what we talk about here, we do a little bit of a combination of that and Wyckoff. And I don't use Elliott wave terminology very much at all. Maybe I should learn it better, right? It's a good tool because it also has a lot of statistical analysis behind it that works pretty well. All right, but suffice to say, basically what we have here, and let's just kind of ignore like the first major part. Let's just focus on this bit down here. We're not going to look at the giant push-up. We're just going to look at the section from roughly like May forward. So back in August, when we finished that cross, what I suspected was one of two things. Either we were done with the first part or we were done with the whole thing. And at that time, I kind of thought we might be done with the whole thing. Like we may be on 1, 2, and then we're about to leave. Part of me thought at the same time, like, you know, the worst thing about the way that I've done stuff is, if you were going to look at this and say, critique it, would be like the lack of continuity when you look at things like the second cat ear, right? Because it's really hard to judge where this starts and finishes, because essentially like the sequencing for it is just kind of a repeat of everything else that came before it. So like you end up seeing the same basic wave M cross 1, 2, like you see over on the left. All right, point being, when we came across here, there was an expectation that there was a possibility that you go ahead and jump here at 520. And when that didn't happen, this is where I kind of felt like things changed, because when we pushed up around the 26th or so, 23rd, 26th, whatever it was, of August, I mentioned very frequently, I think, at the time, that it needed to break 520, but it had to hold that support. If it didn't do that, it wasn't bullish. And so as soon as it pushed up and then closed back beneath there, it didn't look good. And I don't want to say like you're kind of at that point reserved to going down forever. You're not. We don't see it as a straight line, right? Like there was a lot of chop. And had you just kind of got in a put position or this or that, you may not have seen that really pay off for a month. I mean, it could have been a while. I mean, this took about a month to kind of work its way back down to just breaking below 460. You know, we think about it as happening all really fast in some ways because of, again, we're thinking about it in the past, like, oh, it just broke down, it's been going down forever. Not really. You know, there've been a lot of time. Like from the time it broke at 503, it took an entire month to get back through 460, which is a lot of time. So it built out there for quite a while. So naturally, like at that point, you're looking at this as if, okay, Well, what didn't happen was this didn't happen, right? And if you want to go do a comparison, look at something like what happened in January. Okay, people love to talk about January, but it is a good sequence for understanding like what the cross up might look like when it's truly like hyper bullish, like when there's a reaccumulation and it just breaks out and there's no spring action, nothing like that. There's no distribution at the end. This is essentially exactly what it looks like, is that you just cross here instead of not crossing. That's really the difference. It's super straightforward. And it also happens to be the difference between what happens here and what happens in November of 2021, which is, of course, another area that looked like it could break out and it didn't. So instead, we start going downward. And at this point, it's like, yeah, I'm not really sure where the bottom is, but I'm pretty sure it's at 460 because that's been the longest standing bottom. And it takes a long time, like it takes about a month, and then it finally breaks down, and then you start seeing what becomes like an acceleration. And we already had that 440 target, and again, it iterates the same thing at 440, and then it breaks down again. And this is kind of what I missed this week. So I'm playing catch up here because I haven't been able to really talk about this, but it basically, after Monday the 7th, it said it went the opposite way in some ways, but I thought it was going to take an extra week anyways. I thought IWM would probably go first, and it is. And it hit the level that I wanted to hit, by the way. So we'll get to that. This is very positive. A lot of people are feeling real negative right now. They're accusing me of like hopium and all this junk on comments. And it's like, I don't know why you're accusing me of hopium. Like, there's definitely no hopium here in terms of just being honest. But if I see it as a bottom, I see it as a bottom. Like, I don't know what else to tell you. If I see it as a potential bottom, it's a potential bottom. Like, sometimes I'll look at something and I'll say, yeah, this could be it, but it doesn't really look like it necessarily is. Like, it could come back down again. That's me saying it's potential. This, to me, is much more definite. Like, it made the move. It's a 1, 2, 3, 4, 5, and then it broke out. And if it pushes higher highs here and then holds this creek, that's it. It's confirmed. Like, it's a flag. It's straightforward. And it hit the target I wanted it to hit. Like, I didn't fudge this line. I wanted it to come back at least to the top here at 214. Perhaps it could go as low as 212, 213 IWM, and then it should take off. And my argument was last week that I thought, based on the timing of these waves back here, that October 7th was basically the end of this larger structure. And I think that was right. Now, if it's the end of it, why are we still iterating, Booksy? Clearly, it's not right. Well, there is something that changed a bit on October 7th, aside from this being kind of like a last-minute dip. And maybe, just maybe, I could have measured from this bottom instead of this bottom. Now I would give you the extra couple days. But my thesis was that the week of October 7th, IWM would take off, potentially, and then maybe the 14th. That following week, AMC would take off. We're still within that week. I don't really see it as necessarily like it has to be that particular date, although, sure, would have been nice, I guess. Make you feel more right about it, I suppose. So when I'm looking at this, that's where that measurement came from. It really came from the wave that starts on August 5th, okay? And that gave me October 4th and 7th. It was kind of like a mixed bag. That's between a Friday and a Monday. All right, so that's this week. And I hypothesized, again, IWM would probably take off first, and I didn't think AMC would necessarily follow right away. It could take an extra week. So that's still the case. It could take a little bit longer down here, and take off between the 14th and the 21st sometime. So that's where I've been coming from. But in terms of like lows, no. Like, I didn't call for a low to come down to 4. I didn't say that I thought it would come that low. 425 was kind of the place that I saw it being the most likely to stop, because it's kind of like the center mark here, and I didn't like the idea of breaking below. I didn't like the idea of breaking below 440. And I'm pretty honest about that. Like, I figured if it broke 440, it's probably going to slide. And it did. It slid another 40 cents. I mean, it's not a small thing that we didn't find a bottom at 460 or 440. But that being said, does that mean that the writing is on the wall? It has to go lower. It's going to go lower. We'll see. I think there's one part of this that's missing, and that's a big reaction. We just don't have it. Maybe it happens here. Maybe it happens slightly lower, like at 4 instead of 403. That's a possibility. We'll get into that in a minute. But I think that it doesn't matter if you think it's going to go up or down at this point. You need that reaction. I've said that before, and we've gotten those reactions, like the bigger ones. I think there's one here that's very much missing, and it's essentially a reaction back up to 480 to 5. Why would you have to go back there? Because this is not an adequate test of it, because this is going like parabolic the other way. There's never been a moment where you get a parabolic move and there's not some kind of steep reactive move. Even if it's going to advance and continue to advance, you have the point where there's a reaction and then it's proven whether or not it's going to continue. And we're in that moment right now. So when I look at this like retrospectively, I'm like, okay, clearly there was a change here, and then there was another change immediately after on August 27th when it made that upthrust to 520. We haven't seen it since. And ever since that point, it's been definitely in the same kind of motif coming down. This reminds me a little bit of, and I've said this before, it reminds me a little bit of March 2022. And I talk about March here and there for AMC because I think that when we're in these moments of like uncertainty, pattern analysis can fail you. And so it's important to just kind of get a general idea overall of different instances that we've seen and why they've done certain things in certain moments. And it just really reminds me of this because of the nature of the arc on this, the nature of that beak. And I'm not going to sugarcoat it. I don't really care if at this point, if I'm accused of something like for being cocky or arrogant or something like that. I don't know. I called the crap out of this move back in March, and I genuinely thought it was going to go to like 32 or something, and it hit like 34. And it's a reactive move that is built on what I call like that slingshot model. And I just want to point out this beak formation, the one that I guess folks seem to be thinking is like the end-all be-all death nail. And there's just so much crap right now about it's like inundated every time we go down. And I don't even need to see the post, but for some reason people like share those posts with me, and I'm like, I don't really need to see this. Like, it doesn't matter to me. This kind of stuff, guys, is very unusual if it doesn't have a pretty strong reaction. And when it comes at the bottom of a spring, if that were to happen, then you typically can see a pretty strong reaction back to the upside. So when I talk about this idea of like a beak, I'm talking about that stiletto. It's kind of a joke now, but like I used to call it like a beak. It's basically just a parabolic wedge. And what's interesting is on GME, it looks like a straight up wedge here from September 30th. And on AMC, it's still like got an arc going from September 30th forward. This is an iterative motion down, right? There's a repetition of motion all the way to the bottom till you hit that new low. If you can get that reaction, then from this point forward, it's an accumulation. And at this point, like back in March, from basically the 16th through the 22nd, there's an accumulation that happens on a rise here, and it's essentially an M cross. You also get finally like that big creek jump that you've been waiting for. And then, of course, triangulation-wise, it goes right up to where the SOS should be, which is at the very top of the range. So you get this gigantic leap right here. And that ends up being like a pretty significant motion for the whole range. Now, you might look at this and say, well, does that mean, Booksy, that we're going to be in a big heap of trouble? Like if we hit the top here, we're going to slide back down and make new lows? I've already said that I thought that it's possible. I don't necessarily think it looks just like this, but I've already said that I thought it could come back down to like 2.5s. I had a lot of people that were like, okay, that's fine. It makes sense. a lot of other people that say, no way, that's never going to happen. I don't really care. It's a question of liquidity. If it doesn't need it, it doesn't need it. I'm more than open for us to not do that. And if we don't do that, then this would have come back down, tested here, and then rebounded, right? And then it starts looking a lot like that 2020 bottom. And that would have been a situation of like a reaccumulation before advancing. That didn't happen back here in March. Could that happen in our current time frame? Absolutely. You know, the issue with doing any kind of comparison like this is being way too one-to-one and assuming like you know that the answer is going to be this when it doesn't necessarily have to be that. There's other reasons why I think we come back down, and I've already talked about that. Partially because, again, back here, you didn't have this move, initial move like way up. You know, this didn't start with some kind of, it really would have been like back here. This didn't start with some kind of like massive move to the upside that then turned into this later. And obviously this was coming down and had a pretty strong reaction on the bottom, but it's not anything like what we see where we are now. So there's certainly some differences. My point being is that this type of formation where you're kind of getting that beak to the downside, absolutely 100% in my opinion is potential for spring. So how low does it go? Those are the questions that are harder to answer. And I think it just depends on what you think the bottom is. And I clearly didn't get that right. So there's no reason to like kind of fuss about those type of things when we're really just looking at, again, like ultimately where is that beak formation. And I know that, again, I have messy charts sometimes. They get a bit out there. I kind of add a lot of stuff that I want to add, and then it looks like a cluttered mess. But I've got pretty much everything on here that I want to have on here. And the one thing that I'm looking at right now that matters to me is this beak formation. And it's basically the exact same thing that we just saw on, I'm going to make it like a bright red and bold. It's basically the exact same thing we just saw. And that to me is not typically like a bearish pattern. It's different than like a hook to the upside, which could definitely be something like distributive, where it comes up in like a parabolic fashion upward, as in like a hook. We've seen plenty of those, and they tend to be distributive. It's different than a flat bottoming, where it kind of comes out and rounds on the bottom. Like, this is not like that. This is definitely 100%, in my opinion, like a bounce. And when you see that rounded feature, does it mean that you're definitely going to go to the upside 100%? No, but it's like, just take it for what it is, you know? Yes, are there distributive elements in here? Yeah, there have to be, because you can't go down like this unless you have these distributions. You had one at 570, you had one at 535, you had one at 520, you had one at 5, you had one at 460, you had one at 440. Those are not the questions. That's part of what we call an iteration, which is that repetition of the wave. It's doing the same thing. Pumps up, distributes, tries to push to new lows. Pumps up, distributes, tries to push to new lows. Pumps up, distributes, tries to push to new lows. Over and over and over again. Why are we doing that? Well, we've talked about this. The MO of an operator is going to be to drive the price as far as they can away from the direction they want to go until it's time to go, because if they're accumulating, you want to drive the price lower. I don't see why that's complicated. If I want to get shares, I want cheaper shares. It's pretty straightforward. Now, what's interesting is that there was an article about a couple days ago or a day ago about this, I think it was called SG America Securities or something like that. I don't know. But they apparently they've sold over 600,000 of their shares. They still have like 400,000 or something like that shares. So they've sold like 60% of their position. If you want to know, is it just short sellers or is it people selling? Like, there's your answer. You know, who is it? Who are they trying to shake out? Who are the weak hands? It's not just retail. You know, they're shaking out other institutions as well. clearly some institution that maybe bought in low has been selling off in this time period. You know, there's definitely hedge funds that are selling their positions. It's not just bulls. When we looked at the 13F filings, it was predominantly bullish. It was a lot of longs, a lot of longs. It was like 90% plus longs. And then you've got people like Vanguard who've got like 30 plus million shares, and you're like, well, what are they doing? If they have 30 million shares, why aren't they taking it up? I don't know. Not exactly. But I can say that if they bought in down here, they're not really suffering, are they? If their price average is around $3 or even around, you know, somewhere between these two, you know, these two kind of whip arounds, if it's somewhere around 350 or something like that, or 360, they're not exactly hurting by driving the price around, and they're giving themselves opportunity to shake out sellers who would be selling on the way back up. So regardless of all that stuff, I know that was a lot, but like the simplest truth here is usually the best truth, which is that typically if you're looking at something like this, and you're trying to figure out like, well, what's going to happen? Why are we going so low? Blah, 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 blah. Look, there's ways of analyzing this like I'm doing right now with a lot of different ideas, right? Where you're going to see different things, like where I'm looking at trajectories, I'm looking at waves, I'm looking at all this other stuff. And then there's kind of like the most simple way of understanding this, which is really just like we were looking at in March, which is basically, all right, you have a beak formation coming down. Is it going to break that beak formation coming down? And if it does, there's ways of measuring those reactions. It's not that complicated. This would be a key, these two would be like key metrics for measuring that reaction. If you go back to March and you look at those measured reactions, this is kind of like how those arcs play out. You would return to one of these two right here, because these are like your main floors. Again, maybe it seems like really complex to some. To me, it's like, I don't really get what the fuss is about. I'm really not trying to be like Mr. Optimistic here or Mr. Hopium. I just don't see like what are people so afraid of? You're massively oversold. You've got essentially like an iteration down here on like super low volume. Like I'm missing, what am I missing that makes people feel like it's about to drop off a cliff and go, you know, to something really low? Like when we looked back at this, the cross section here definitely looked like it could come to at least 350. And that was about as low as I could push it. I had, again, that on the chart, like, hey, there's this low possibility. And so I'm like, I'm not really sure where the surprise comes from. Like there's this low possibility of coming down real low to like the 350s because that's the top of this range over here. Sure, like that's possible. But I think that's a more likely scenario if you're going to bleed this out into November, you know, you're not going to move till the 9th. That would be the most likely scenario there. But every other scenario here really doesn't make a lot of sense for that. There's not really much of a case is what I'm trying to say, like that, oh, it's going to go to the 3s or the 2s right now. Doesn't really make sense to me. And yeah, and I've said that before and I've been wrong, so you take it for whatever you want to take it for. I'm comfortable being wrong. Like it happens. And I don't expect to be right all the time, but the setup here with this kind of ridiculously low RSI as it is, and we'll bring it back up over here if I can. I don't even know where it is. Should have been right there. Maybe I took it off the chart. Well, whatever. It's not on there right now. I'm not going to finagle with it. It's the same though. It's really low. It's the lowest it's been since April of this year. So that tells you something. It's very similar again to what happened back here where it got real low going into that sell-off. Already had that early rebound and then pushed out. And now you're seeing like a reaccumulation of sorts. In this case, it's all built out around the same zone. In our case, it's like much higher. But yeah, sure. Like, is it possible that this goes lower than that? Maybe, you know. I would just keep it, again, as simple as you can. If you're really, really concerned about the price action coming down, all I can tell you is I don't know again, why, whenever we go down like this, I don't know why bears get so ridiculously confident. And the lack of retests just says a lot to me about the nature of people's attitudes. Like, there's a way to go about this in like a humble manner where you're like, hey, I think it's going to go down, but I think we're missing, maybe a retest back up that then drops. That's fine. But then there's the folks out there that are just like, no, it's going to drop off the face of the earth. And you're like, I don't know where the heck that comes from. How are you going to do that? It just doesn't make sense to me. So when I look at this, like, I'm looking at a couple different things. So we're looking at this initial drive up. That's probably, again, correlating more to that SOS. And then we're looking at that sign of weakness right here, the drive out. You can see that right there. Okay. So moving to make the illustration as simple as I can, so you can see it visually, fairly straightforward. And yeah, there you have it. So voila. I think this should be, this is where things get a little bit dicey. I think this should be here though, because this is actually kind of a double. You can see here it pushed through once, reacted, and came down again, and then it actually comes up and camps on that line until it drops. And I think that's this marker right here. These are the first two on that reactive bounce right there. So let's color code these and make it a little easier on our eyeballs. Let's make it blue. Again, just to, oh, there it is. I guess I just had to double click it. Yeah, we're really low. This is on 2 hour, but kind of hypothesized it would come down to at least 32. It's still got divergence on some time frames, but it's not there on some others, so it disappeared. It's like a mild divergence. Well, when it's like flat like that and the double RSI bottom happens, or it's like slightly higher, you could call that like a weak divergence. It's a real thing. It's not fake. It's just not a strong divergence where it's like completely the opposite. It's still there though. Like these three pushes, like 1, 2, 3, basically all have the same RSI bottom, and the price has been coming down. So yeah, when I look at this, I'm pretty convinced that it's similar. It's not dissimilar. So you got this push down, you've got the arc. Let's look at finishing this comparison. I need to make sure this is tight. This is supposed to be tight. So you've got one trajectory. This is the one we've kind of been using the most, I would say, although it's not the only one. This is this guy. So here's my criteria for this. Okay, if you're going to do some kind of comparison, this is my personal criteria. All right, and I judge myself on it. And sometimes I can be a little bit critical about other people's approaches. That's just the nature of, I don't know, being academic about it. It's like, I think there's a right way and a wrong way, and I'm not going to apologize for that. There's no right way, Booksy. No. I think there's a right way and a wrong way. So instead of looking at this as if it's just a series of bar patterns that move left and right or whatever, look at it in terms of relationships proportionally, because they're not the same proportionally exactly, and so you want to look at those relationships proportionally as best you can. And so the other one we wanted to mess with was this guy. Actually, this ended up being really, really tight. And what's cool about this is that this is a long-term setup, so eventually it actually comes back through. I want to say, yeah, it actually comes back through and hits the same intersections. So these are like triangulations for later. So it's potential to be very long lasting, which is kind of nice. I like that. So here's this one. It's way over there. So again, this argument that like you can't go all the way up there and then come all the way back down, I would just say like, no, it's definitely possible. It's happened before. So let's look at this, like, right? This is a simple way of comparing the two. I think it's important that we get this right. I want to say that we want to kind of look at this here. It's probably going to be the best one to use. Because this is the one that's like more or less long-standing. But it's challenging. There's a lot of markers here. All right. Well, it's tough to say. Somewhere around there, probably. This one's a little more difficult. I'm trying to use the reaction that happened here as a guide for where that might be, where it's set up. The problem is that I think, I'm not 100% positive, but I think we may have to do either this one, which is steeper, which is on the outside of it, which I didn't do here, or this one, which is actually kind of shallower. Both look good to me. This looks more like the top. So I'm not sure. It's a complicated one. Maybe this is better, since that was like a distribution. It's a little flatter, but that's fine. We know there's other ones here. If we really want to like cover our butts, we could just kind of do that and just say, all right, well, there's two possibilities. Whatever, right? Somewhere in the midst of that, you would have that reaction. The other thing that happens here is a trajectory inversion. So there's a 104 degrees here, and then I think it's basically exactly the same going the other way. That's 104. And interestingly about this, the steepest trajectory ends up being the one that follows through. So now I've moved it out. It's 109. So let's make sure we get that right. 109. Yeah. So the steepest trajectory ends up being the one that kind of follows through, which I always find kind of interesting on this particular model. That's the case. And I don't know if that's always going to be the case, but that's what we would probably use here as well. So either September 30th, which is possible, because remember that's when the wedge starts. So here's that little tiny drop here. There's a wedge here on GME during that time period. Could be September 30th. That's maybe that iterative push up. And this whole thing is like a bigger top here. Or we could use the one from 5, which is September 13th. And either way would be fine. The thing we got to be careful about with doing trajectories is we got to be careful about doing the trajectory in a way that is overly biased, because sometimes it's easy to get really excited, but it may not be the one you expect. So we're going to do a couple. I'm going to use that one and this one. I'm going to make an assumption here that this is basically done, because it did push below and then came back above. It pushed below that 410 mark and then came back above it. These aren't that different. One is 65, one's 73. So let's use a wider one. Let's do a 60 degree and a 73 degree trajectory here. And then a 60 degree trajectory. Okay. And then we're going to make a determination on which one fits best based on a couple things, but we're just going to look basically at this for now. Maybe later on we can make a better assumption about which one's more likely to happen. Now that's not a hugely fast trajectory. You may maybe look at that and say, well, that's not really that fast, you know. It should be faster, right? I don't know. You know, I'm not trying to fudge anything here. I'm trying to do my best to make sure that this is as accurate as possible. If I'm going to do the comparison, I'm going to just do it, let the chart speak for itself. And what I'm doing here is I'm basically just doing another version of the wave setup. I'm just using the angles instead of using like the other arcs, the major arc, like the 50% one. So last time we talked about how this kind of motion right here, not last time, but when we talked about this last time we talked about March, we talked about how this ends up being like a 50-50, which makes sense. It's basically like you're jumping the range and then going an additional 50%. The difference is very obvious in this case, which is that back here, the P&F didn't have you going beyond. So this range itself is much larger, right? I think it takes a lot less time. It's only like a month and a half or something like that. The point and figure for this was only, I remember at the time, because Stockfather was still like, you know, part of the community and moving around and doing stuff. And he was like, yeah, it's like 34. He nailed it. He nailed it. I was a little off, but he was like right on the button. And so at the time, this really only allowed you for that 50-50. Now you guys are like, well, looking at that, it looks like it's only going up to 870 something. That's what so-and-so thinks. They think it's only going to go up to 870 something. And I'm like, yeah, maybe. At that point, I'd probably look at the larger wave and see if that makes sense. And if it doesn't make sense with the P&F, then I don't necessarily think that's the only target or the best target. The larger wave target is up here. And it's quite high. Something like that. We could turn back, hold on, we could turn this back on for just a second so I can see if that's about right. That's about right. Yeah. So certainly, like, one manner of speaking would say, like, hey man, I think this could go up there, you know, by November it'd be up here somewhere, but I don't necessarily think it's going to go that high because this only goes like 50-50. But again, in this range, the P&F only had it going up that high. So like the point and figure here was only there. So if I were to just kind of use a measurement of like the cause built, point and figure measures what is thought to be the cause and then the effect. Okay. The cause being how long and what have you traded there? How long would that take you? Had it going here, right? So the problem is this is not the same. So there's a bit of a disconnection, and I think it was really very, 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 very tight. It really was extremely tight. The problem was that this is not the same in the current time frame. At least from what I can tell, we've done it a few different times. This is a very long-winded range. I mean, it lasted several months, as you're all aware. And the P&F really has us at like really more of an average at like 16 something, which is really high. So I'd have to be kind of questioning like, why is there that disconnect? If, you know, supposedly this is like maybe 1-to-1. And it's about 16s on average. I'm going to just say on average because there's a couple different targets that we got. But so that's distinctly different, right? So there's a huge amount of discrepancy there, right, that we could talk about. Another thing is that according to this, you would only get up to $9. Like according to this build out, the way that we built it out, you'd only get up to $9 at the end of November, around the 20th. You wouldn't necessarily go any farther. And then that trajectory would essentially be done and you would just come back down. You know, I think it's a possibility. There was a, and I'm going to bring up that crazy chart again. There was one right here where it only came up to like $8 to $9 and it just came back down. It's pretty similar to what that thought process was. But I've been talking about for a while, going back up to like that 1390, 14 area and hitting that creek, which you also visually, you don't see that here. Like I didn't have that on the other chart, but it intersects right there at right around November 22nd or something like that. And that marker to me is like an outstanding creek that needs to be respected. So when I look at that, again, big picture, trying to simplify this a little bit just to kind of keep it the same, you can see like this doesn't quite meet that mark, right? So there's a lot of disconnect in these two examples, but I will say like there's still a lot of really strong similarities in the way this build out is. So let's just keep going with it for a minute. Let's take a look at where do we see this basically hitting the SOS? Where do we see it kind of breaking out? This is where smart money started really buying in. This is the markup. Notice that there's pretty low volume during the sell down. It's very average to low volume. It's really similar. You have a strong spike early on, like after the selling climax, and you've got like a big reactive move. The RSI becomes, you know, a little divergent, so to speak, on this bottom where you're kind of turning back up. I wouldn't say it's divergent there, but it's essentially like rounding out, right? And then it pushes up high. You've got like the breakdown, so on and so forth. So when we're looking at this, that buy-in here on February 9th, 2022 would be similar to the buy-in that we experienced here. Another way to look at it would be to ignore all of that buy-in and just look at this as a bottoming and start from here forward. Basically start from January 24th and say that that's similar to what happened in May. And so it doesn't really make a difference because in both cases, if you think it's an accumulation range, it's just an accumulation range. Like, it wouldn't really make any huge difference. So like, why do you even bring it up then? I'm just saying, like, if you guys go back and do your own comparison, you're going to have to decide what you include and you don't include in this. And I can't tell you what is and isn't right. It's just a comparison. It's just a simple comparison of what looks like a very similar range that also had this kind of nasty sell down back to a floor. It didn't hold higher supports. You know, this is kind of reminding me a lot of what we see now again, because this was probably the greater support right here back in this time period. This would be like the equivalent of our 460 right now. You can see there's not that much there below it, and we're seeing a really similar kind of build out here as well. You know, there's that 440 mark. So you would have looked at that and said back here, like, well, that's a stronger floor, you know, but this ends up dipping back down to trade the low liquidity. Too little, too late, Booksy? I don't know. Maybe. Grasping at straws. This is probably when people say, like, stop pumping hopium. It's like, okay. But I can't ignore charts like this just because someone doesn't like the idea that it could go back up. Like, that's not fair either. You know, if TA is blind and balanced, you still have to look at both sides. Even if you're looking at this and saying, well, it's down, it's red, therefore it's going to be continuing to go red. Okay, but that's not balanced. Just like only being bullish is not balanced. You know, you have to look at both. So this is the way I'm going to choose to look at it because I think it's balanced. And I think when you look at this RSI, it's really hard to not see those similarities. I mean, I'm looking at it right now. It's like 1, 2, 3 bottoms here. Starting in February of 2022, we've got 3 bottoms here. You know, starting at that push up in August. I mean, it's super, super similar in terms of the way that it's building out. I think this is a 1 hour chart. This is a 2 hour chart. We already talked about how this is like 5 months or whatever. This is only like 2 months. So pretty dramatically different in terms of like timing, right? Like how long it took. Clearly, like March can't be compared in the same time frame because it's very short by comparison. So for RSI anyways, that would be a challenge. You'd have to kind of figure out what you think is best. So then let's just generally look at this and say, well, what do we think happens here if it does work out? Well, I do believe that we've pretty much broken out of that arc. So the way I drew it here, it doesn't look like it. Kind of looks like we didn't. So it's possible maybe we didn't. I have it on like a higher time frame, but I've got it on another chart. I had it kind of drawn lower, and it looked to me like it had basically stretched as thin as it could get, and then it just sort of popped. So I feel like it's out, And if it's not out, it's like interacting with that marker like right now. So I don't think that the interaction here should be ignored. Someone else in the Discord was mentioning like, well, what happens if it goes down again? And I'm like, it's different, because while you could come back down maybe to try to get to 4 again, it's once it's out of that arc, once it kind of moves its way out, you're not in the same kind of binding that you were before, where this has been a constant resistance. It's no longer a constant resistance. So if you were to sit there and ask me the question, and I think it's a valid question, hey, could this come back down again? My answer would be, yeah, it could totally come back down again. You know, it could hit 410 again. But that's not really what you're asking, right? Like most people who are asking that question, they're really asking, can it go lower? Well, technically, yeah. I mean, like there's a creek here that goes pretty low. It could go to like 4. So when you look at this big picture, it's like you may think, oh, it can't come down again. That's not really true. Like just because it's on the outside of this arc doesn't mean it couldn't make a lower low. But a lower low doesn't necessarily mean anything. What you're really looking for is that change of character. You're looking to see what happens outside of this arc. Once you're out of this arc, you're not bound by the same rules and principles that you were when you were in it, which is that you're not going to exceed that. Now that you've exceeded it, you can go wherever you want to go, and you can start testing higher ranges. And that's what we want to. That's what we really want to focus on here. Now I had a really good chart back here, back in the day, that had all these kind of arcs on it, and I don't know how I did it. I'd have to find it. Maybe it's a good one to look for. It was a fun chart, and once it got done, I kind of just retired it and didn't use it again. But it was basically like arcs on this pattern, and it was interesting because I did it with like a fib scale, and then I found that when it got here to this breakout, it actually hit all of those little arcs, which was kind of fun. I could do something similar, but I think it's suffice to say that, you know, if you're just looking at the big picture, you probably can imagine it anyways. I don't think it makes a huge difference. So I did a inverted head and shoulder here on the micro range. We'll look at that in a minute. But on this particular setup, you would probably expect this to do something along these lines, going up into the $5 488 range. Now, that's interesting because the wedge breakout target, if I recall right, I posted it on the Discord group, but the wedge breakout target has a move to 450. So if you look at just September down and look at that as a wedge and it breaks out, it should go back to at least 450, which is right here in this little pocket there. So the expectation would be, minus any kind of major throwbacks or whatever, that this could potentially go all the way to 450 on the first push. That puts you above the 435, 440 floor, right? And I think it could make sense that that even happens today, although I wouldn't necessarily bet on it because it's just, you know, kind of pointless to worry about something like that on a Friday. But then the larger Beak actually had a target of 550. So that's going from this top down as a pretty massive break all the way back up to 550, which again, I'm not trying to make it work exactly how I want to work, but if that is a descending triangle, you just measure it like a beak. Instead of measuring that, you can see the target breakout would take you back to 550, which is above this pocket right here. And that looks like, as far as this trajectory goes, it looks like you wouldn't get there till late October. But there's another steeper trajectory that could potentially take root. I think this one was saying next week, if I remember right, the very first one, because the head and shoulder target would be a lot faster. But then from that point forward, it could take a little while. And the build out for that, who knows, you know, how long exactly it takes. We may have been estimating that this was going to be at a high in November. And it looks to me like this, November 7th, is a pretty decent estimation of where you should be hitting the top. So I got to say, like right now, it does look like it's going to be maybe positioned at an SOS during this time period. Like it's very possible, you know, that this is like an SOS, and I don't know about the rest of this. It's kind of like hard to say, but you get the idea. We'll just have to see what happens if it breaks below there. So maybe this is a simple enough way to understand the moves going into November. I don't know. You know, election season could bring about a positive run, could bring about a negative run. This really doesn't really matter to me. And then this is starting to line up more with something else. It's not really looking like it's going to go and follow this trajectory forever necessarily. When we did this last time, I had trajectories over here, and it looked like it would have to play catch up to those. And I remember that being this guy right here. This one was the one. Couldn't exactly tell you where that came from at this point. You see it's pretty dramatically different. This being like early, mid-October, this being right around elections. But I think that's okay, right? Like, it's okay to know, like, your timing may not be perfect. So you have different possibilities, you know. It's the same outcome in terms of target. It's the same exact level right here at 880. So I think there's a possibility maybe it hits that target and then we do see another reaction. And that's where we're kind of questioning right now, is like, where does that other potential reaction? I think that's very possible. That's where you get up to like the 13s or whatever it is, right? And this is where the P and F really kind of shines. Is that too high? No. You know, we've talked about a lot of other things lately. I did a huge analysis on this compared to 2020 and what my expectations would be. Here's what I'm drawing a conclusion from, okay? If you're like, all right, that's cool, got it, you're just kicking everything down the road. That's not really what I'm doing. In some ways, yeah, some of that's kicked down the road. In other ways, none of it is. Like, that's still the same time, late November. Another thing that's really interesting here is, like, so this is delayed. The breakout's delayed, but the end result is the same. Another thing that's interesting here is the nature of these levels, because just like before, we have some really, really good levels that we're like kind of watching and monitoring. And if I had to like just pick 3 that were really important, these have been the same 3. It makes no difference. And if you look at the structure of this comparison versus the structure that we did on the other comparison, they're not really different. They're the same. They're all targeting like the same levels, which is good. That's a good sign. The fact that we're kind of aiming for potentially like an SOS, the fact that we're aiming for that 485 level, 490 level, like that's a big deal. You know, that's not a small thing. All of that kind of lines up with what you would probably expect to see. Now, I'm not going to go into like, again, too much into like, well, what would the end result be? But like later on, you can see that some of these levels play in quite a bit long term, you know, and so this 430 level long term ends up being where this breaks down, and essentially this would be like long term again where it holds. Now, I'm not saying that's going to happen, but I'm just saying if you wanted to continue the comparison, I guess you could. You know, I'm not going to do that right now, but that's where it would be. And then the same thing over here. It's like the breakdown level seems a little arbitrary, but really it's just targeting this level here, which was already like a breakdown level. So it's an existing triangulation. And I would suggest, yeah, it's kind of doing the exact same thing. In this little pocket right here, there's the breakdown. It's the same spot, roughly. You know, and those are different. This is an X over here and an X over here, and they're both kind of targeting the same level. So take that however you want to take it, but that's a pretty convincing waveform cross, like a double one. Double crossed. Okay, so I'm not going to focus on necessarily like what is the outcome after that. Right now, I don't really think it matters as much as people want to make it matter, because if you get the move to the upside and you make the money, then there's nothing to worry about, You can reposition, rearrange your portfolio, and then move forward. And you can make a decision later about whether or not you think it's going to continue. If it comes back down here and it holds in the 5s and 6s, then it continues, And if it breaks down, then you've seen it before and it doesn't continue. And so it really doesn't make any difference to me personally, because I'm like, well, I don't really care. Clearly this is identifying this as a potential move here. I think that's really 1-to-1. The blue line is kind of interesting because I don't even see it in this time frame really matching that well. Maybe it does. I don't think it does. Not super well. It's like close, but not quite. It's interesting to see that triangulation and then like the X outpouring from here. Like the way that this set up on the breakdown is really fascinating. Yeah, man, that looks good. I kind of like that, actually. I'm going to leave that. It is lower, though. You can see it's like clearly lower. And this one's lower as well. It's really interesting, though. I think this is probably the most interesting thing I've seen in a while. I'm going to make both of these yellow so we can see them. So that narrowing is targeting like a high up here around 511, and then the same exact thing applied here back in the day. Yeah, it's tight. Pretty tight. It kind of makes you wonder, like, what's more important, right? Like, clearly in March, that level was important, like, in terms of like a support and resistance. But then looking back at it, look at that yellow mark here, and just think about that as a floor. And it's like, think about it as a floor, and then this is a weakness pushing up and then driving beneath that floor. So it created this sense of, we're going to hold this floor here, right, going forward. And then it doesn't hold it. Instead, it like dips beneath it here. And then when it comes back, it drops beneath it and rejects off of it. This is kind of interesting. Like that trajectory, which is built by bulls, is used, as part of this breakout. But then it's also used later by bears in the breakdown. And then the trajectories downward probably are used going forward as well. And they are right here. You can see that this is the bearish trajectory. I mean, it's kind of wild looking back and thinking that these two little tiny ears right here that happened in the course of like 6 days really define the next 6 months of price action. But they did, they did. So it's really fascinating to see those two competing, motions. I find that to be really interesting. Maybe you do as well, but my point being that looking at the current time frame, you can see a very similar kind of battle going on in these trajectories. So this would be like, oh, it's dipping below that trajectory. It's suggesting to you that bears don't want to continue on this trajectory up. They want to continue on this trajectory down. So this becomes like a long-standing potential trajectory that needs to be broken. Unfortunately, it's there, right? And and that there could be a massive kind of pump and dump before, I guess, that termination date on December 6th or December 9th. So here we're running into some problems. So one of the things is like this trajectory worked really well here. It's not really working here. One of the things I was going to mention about this, and I said we would check it later, was the reaction is typically pretty similar to the move up. So 110, yeah, I mean, this is really close to the same. I mean, it's almost hurts how close that is. You know, that's like 110 right there. It's basically from the top down. So like embedded in this is a waveform up, back, down. And so one of the things that's not working right now is like this clearly doesn't work, does it? Because if it comes back down by December 5th, it can't be all the also way up high on the same date or around the same date. So one thing that I might question is like how quickly does this go up, right? Versus coming back down. Is it going to be like this, where it's just this massive spike that then drops all the way back down? It's possible. I mean, this thing dropped almost the entire move in like how many days, you know? Basically like a few days, 2 days, I don't know. It was really fast. I guess it's not impossible. So if like we hit it on Monday the 25th, way up here, and then came all the way back down, that's still like about a week of downside. That's a lot of downward motion though, isn't it? So I don't know. That's a big question in my mind right now. That doesn't really add up, does it? I don't see that as adding up. So there's a lot of question marks here, right? Another thing maybe you look at is say, well, you know, you're making it go really high. What if it only goes to 9? I mean, if it only goes to 9, then it's an easier move. I guess it doesn't have to travel that far. So potentially it could hit a high fairly early, or it could hit a high at the same time and still come back down. I think what we're really concerned more about is that the trajectory out making sense in light of the trajectory down, and then again the wave out. So it's kind of complicated in that regard. I don't want to get any more. I don't want to get any more complicated than that right now. I think there's good reason to kind of keep on your radar some of these trends and trajectories, and then others, it doesn't really matter. Like, it doesn't matter exactly how this travels through here. It would just need to go up through there, right? It doesn't necessarily matter exactly how this travels through here. It just needs to do the right moves, right? And make the right moves going through here. So when I look back on it, I'm not sure I really care that much that this hits at a particular time, right? So this is a little bit more in line with earnings and what? Elections. So this was one of the thoughts that we had, was that maybe it takes that long if it went down. Maybe it's in the SOS. This one's suggesting it could be. You could be up high. And I think that actually makes some sense, because if you think about a latent reaction on like October 14th through the 21st, that being like your takeoff period, that window's here, and I think it makes almost more sense to not travel beyond the SOS if you need to spend some time there. It certainly would make sense. This suggestion isn't really a suggestion, it's just a triangulation, and it doesn't triangulate until November 6th. So there's that. Okay? So we built out this comparison on the basis of a few things, not everything. And this is suggestion of maybe where you go and how you travel there. And we'll see, we'll see how it goes. I'm not convinced that it won't have some kind of massive move and go no higher than 9. But at the same time, like, it's a different setup. This would be one that you would look at and say, I think this is a phase B top. If it comes up to 13 something, it's a phase B top if it doesn't go too high. If it doesn't go above that 1390 area, then it could be a phase B top. It's a very different setup than what happened in March. March doesn't have that kind of reaction. But yeah, certainly later on, coming back, you would be concerned that if you got back down here that you could break down. And this is kind of right back to square one. Like, there's not a lot of perfect evidence here that suggests like it has to work out this way. But it's starting to look more similar, I suppose. Greater similarity to what we were expecting here in terms of reactions around 485, and then perhaps coming back down again and hitting lows around 240s, 250s, which is the thing that I think a lot of people are like, well, no way, we're not doing that. And I'm like, man, I don't know, man. Like, it's not identical, but at the same time, like, these are very similar in terms of their movement. Remember, this is like a 50-50 down around that midpoint. I didn't even really need to look. I kind of already knew that, but this is very similar in that regard. So if I look at this and I think, how high does it go here? Maybe, you know, if it goes lower, maybe it's better. But I've been saying like maybe 13s, so thereabouts, right? And that suggests you come down to like $2, almost exactly. Which I don't know what to tell you guys, except that is really similar to this overall setup, like what we talked about before. I mean, I even had it not coming down that far. I had it going to like 240s. It's just a different setup, right? But I think it's very interesting that, like, even in the midst of what we see as something completely different, like, we don't think this is anything like 2020, but it really, in a lot of ways, is very, very similar. So it's 1398 at the top. So P&F goes higher, point and figure goes higher than that. But if you go higher than 1380s or 1390s, I think it's too high. So this is the prelim right here, around 1380, and you could probably push it up. Arguably, you could push it up to here, but I think that 1390 or 1388, which is the number I've been talking about for a little while, it's kind of like the highest that I would push it. And when I went back and looked at that arrangement in 2020, it matched up really well with this rising trajectory here, because these are the same parallels that were used in 2020. They're really similar, if not identical. So they're identical trajectories, but I mean, like, the way it's set up is really similar in terms of the hits. So this particular rising trajectory, the idea is you wouldn't exceed this rising trajectory, and as a result, and what I did is I put it down low, is I put it on this top, not these tops. And as a result, you wouldn't exceed the top. And that gives you a auto reaction and then a reactive move on the wave, which makes sense. And this is the measurement we did, again, in the other one, in the other setup, which I think a lot of people were there for that, so I'm not going to recap that. But it was a really good one in comparison to 2020. And it had really similar targets. Like, that's what this is based on, basically. It's a cross section here on these waves, and ultimately this marker, would extend through the bottom. It's starting to look really, really similar, and even now I'm like staring at it. It's basically was based on this giant X, and how it interacted with the up and down wave here. I mean, that looks deadly accurate. I wish it wasn't that good. I really do. Deadly accurate. But that other idea was that you would extend to the intersection here of the creek, the downward creek, this upward trajectory. It's a lot of things, okay? There's an upward trajectory. There's a downward creek for the big picture, that yellow line coming down. So that's the big one. That's really the reason we're going up. It's like, check that marker right there. So we've already done this comparison. I'm going to take it off the screen for just a second. And don't worry, if you're worried about local price action, don't worry about it. It's all good. Nothing right now looks negative. We're just kind of watching to see if an inverted head and shoulder plays out. This is the trajectory that I've been looking at as this is the likely place that we're going to go check. Could be slightly off because there's technically a breakdown here around $46. Like I say technically it could be off because that's a possibility, like that it doesn't go beyond that one since that's where it broke down, not the high. Fingers crossed it goes to the high because that would be a higher target, but it's definitely not impossible. And I don't want it to make it sound like it's only one of those two, but I think that's the most likely two. Okay, and so I think we're going to come back and check that creek. I think it's basically a waveform triangulation. So when we broke down here. We're doing like a 50-50 turnaround essentially. So we're waving through here to come back up to hit that mark. Well, all of these things seem to correlate to the same area. So that doesn't make me feel like I'm wrong. It just makes me think that there's a lot more evidence that this is probably where we're going to end up. So if we exceed that, I can't really say. If we exceed 1388, there's no reason to think we don't distribute. If we exceed 1388, it would be like much more likely that this breakdown results in another larger macro breakdown. That would be like what happened in March. In March, it came too high. It came way too high. It went back into the previous range, and then when it dropped, it lost that level and kept going. That's different than what happened in 2020. In 2020, it didn't, on that second push, it didn't go too high. It was just a reaction and then a phase B top. So you had an auto reaction, then a phase B top in 2020. Which one is this more similar to? I personally think it looks more similar to 2020 in terms of the big picture because of the way this is reacting, the way it reacted here. This is not like March where this was like after a big fall, this is the reaction, right? This is different. It had a massive auto reaction, and now we're looking to see if it's going to make a phase B top. It sounds, I don't know how to even make this sound better. I wish you guys could feel what I feel when I look at this, because I'm like, in my head, I know like all these little things are firing off. Like I'm thinking about everything that goes into these kind of moves. This to me just looks really right. Like it fits like a glove. And the way that it's building out, it fits like a glove. And the only thing that's really missing is a check on this drive up. If it goes and checks that drive up, then you've got a really good chance after that point of it coming back down and retesting for 5 and 6. And that's really where things get kind of dicey. And this is why people are like, well, I don't think that's going to happen, or this isn't going to happen, or whatever. But I'm looking at it like, yeah, I don't know, man. It works really well. And what's weird is that you might look at this and say, well, yeah, but this is the March example that you're giving us right now. The March example had it coming down really low, but that's not what happened in 2020. Actually, that is what happened in 2020. In 2020, it came back down and it pushed beneath the floor again. It did a double top. So even in the midst of that motion being like an auto reaction and a phase B top, there's a motion that comes down, and this one goes all the way to the gap. This is more like what happened in 2020, right? It goes all the way to the gap, and then it bounces, and then it comes back down. Really similar structures. The only major difference between these two things, in my mind, is just the scope of the wave. Like, the only difference between, in my opinion, what happened in March versus what happened in... And it's a big difference because obviously one was distributive, one was accumulative. But the main difference in terms of that move down is the size of that cat ear. I mean, it's just massive, you know. So it's easy for us to look at this and see, all right, this is that. Sure. Oh, this held up, this didn't. Yeah, but you can also kind of step it backwards, and you can look at it as push-up 1, push-up 2, and if this push-up had come way too high, it would have been like what happened in... I know it's confusing. You guys are like, I don't get it. that's about waves, right? That this push-up happened in the right sequence. I don't know how to describe it. It didn't go too high. But this wave breakdown right here, this is what I'm saying when I say like, oh, I don't see any major difference between the two, is this. Like all I see is that this is a big like S curve down, like a reaction, and this one is just very mild and flat. But the parts are all there. Like it's still the same in terms of like movement. If you reduced it to its simplest like measures, this is the 50% right there. And so you can see like it's still there in the same way, and this drove it back beneath the floor. Why am I even talking about this? Because we're making a comparison between what seems to be two very different areas, and they are. But in terms of like that move down after that push up, it doesn't really matter. They're both the same in so many ways. It just depends on how high this goes and whether or not it's distributive or not. If it goes too high, it's probably distributive, you know. So I think generally speaking, if this comes above that top at 1388, I think generally speaking, I would probably consider that to be distributive. But it doesn't really make a huge difference when we look at the big picture here. It doesn't seem to make a very big difference in terms of where it goes afterwards. Like they both have pretty similar fallouts, whether you're looking at 2020 and this is a phase B top, or you're looking, I mean, they are the same, or you're looking at March. You can look at the March run up and you can look at that 2020 September run up, whatever it was. It's the same thing. They both have a 50-50 sling back down to the bottom. And this is where I've been kind of stressing caution, and I think where a lot of people are like, you're over measuring it. You think it's going to go too low, and I'm like, I don't see how it can't. It's hard for me to look at this and not see that, and see that as like an obvious 50-50. How can you not see it? Like that's the breakdown at the halfway point on a move. Now, you know, I'm not like a huge fan of like, oh, it's predestined or something, or it's like predetermined. No, but I think once they've committed to the move, I think the move itself could be very predetermined. Like the setup for the move is very predetermined. That makes sense. Whether or not the move is committed to, that's a different question. I don't think that's predetermined. There's a difference there. So one is like, yeah, we've got the liquidity we need, or we're going to do this. We're going to go ahead and go back down. All of that stuff is being determined, right? And unfortunately, we don't have the window to know exactly what's going to happen and what's not. But this to me is a pretty straightforward 50-50 like drop. Like clearly if they didn't think the bottom was here, they've generated it so that it's going to make another equal parts move from, so halfway there, right? It's perfect. And then this actually breaches and makes it a slightly new low. Not a huge one. It's like a couple pennies or something, but it's there. You know, it pushes down and makes a slightly new low, and that ends up being ultimately the major spring. And then guess what? Then it starts looking like the outpouring of what happened here, doesn't it? It's like you can kind of take this, and again, the nature of the waves, it's like you can kind of shift them around. It doesn't really matter. As long as you're interpreting it correctly within itself, what it is, right? Is this the same as this move here? No. Because this is ultimately part of a larger distribution, and we know it because of where this happened. But does it obey a lot of the same principles? Yeah, it does. In terms of like how high it goes often determines, if you know where the anchor point is, determines how low it's going to go. So the move up here, you know, above that top, in some ways determines above the 50% mark, how far away are we pushing from the midline here. That determines a lot of what comes next. It determines how low we go in the future. So it would make sense then, if you're looking at this in the normal time and where we are now, that the determination of like how high this goes could determine how, you know, this goes way up here, and I think that's what it looks like to me. It would then determine potentially like, all right, well, how far off the middle is that, you know? There it is. I didn't go too much into this last time. I didn't really want to inundate us with like all this stuff. But I did look a lot at, what would the potential be on these lows, and I sort of skipped around it because I didn't really want to go in depth there and kind of pigeonhole myself, as the expression goes, into committing to like this or that. Mostly because I just wasn't sure. I didn't feel like really confident about the overall move. I kind of felt like, meh, it's a little too early to tell if it's going to come back down that low, which is what people miss when they see the chart, because they just see the chart and they think, well, Booksy thinks it's definitely going to do this. And I'm like, meh, it's kind of too soon. Another thing is like the possibility of an LPS doesn't even present itself here, but there's definitely a possibility of an LPS. Again, this is what a lot of people will miss if they don't see the chart, or if they don't hear me talking about it, is I don't point it out to them. There's a possibility right here of like a build out, and I have it on the chart. It's just light, but it's this like blue line right here. It basically is like you don't go down as low. Maybe you hit that gap, you react, and then you stay pretty high, Like this is what we would need to see happen anyways if it's going to react back up. Sure. But I'm not of the opinion that necessarily matters right now. I feel like that's kind of irrelevant because this hasn't even happened yet. So like, why are we trying to worry about an LPS versus a spring? We're not there. All I can do right now, the best I can do right now, is just give you guys the waveforms and what I think are adequate spots, to consider. Yeah, and this may even be a little different than before, where this kind of comes down and maybe it reacts really strongly at first, almost like a head and shoulder, and then it does fill the gap later at 3, and yeah, maybe that reaction is really last minute and it comes really high back up. It really wouldn't matter. See, there's still a 50-50 S-curve. Makes no difference. Like, makes no difference, So those are things that, like, we'll look at later on. But right now, like, this March comparison that I just did, it basically is the exact same, giving us the same conclusions, which is good. That's a good thing. It's essentially giving the same conclusion as what happens in the 2020 comparison. Is that hopium? I don't know. And I don't really care. You guys can call it whatever you want to call it. I'm calling it a chart analysis. I genuinely think that it's possible and even probable. And the way I'm looking at it is simply waiting for confirmations. Until you get confirmations, nope, nothing's there. But it's not at all, in my opinion, like out of left field. It's not like me pulling out that's the bars rip up pattern. You guys are like, yeah, it is. You're just saying it rips up. Yeah, but we've been patiently waiting for it to jump this creek. It hasn't quite gotten there yet, and now it's like at that point. It's like either over the threshold or it's at it again. And I think it's at a place where it can't go much lower for fear of just hooking and dropping really low. So okay. So I wouldn't say 1398. I would say 1388 is probably where you don't want to go higher. It may seem counterintuitive, but if we don't go higher than 1388, we probably store up the rest of that point and figure for like the bigger move. If we go way above 1388, we go up to like $14 or $15 or $16 or $17. 17 was sort of the high PNF. I can't give you any consolation for it. There's no reason you would do that and come all the way back down unless you're going to macro distribute. So it would be better long term to not go higher. Yeah, it would be much better long term to not go higher. But for now, do I think this comparison is pretty steadfast and straightforward? Sure, like it's pretty straightforward. You know, what if it only goes to 9? What if it only goes to 9 and doesn't go way beyond 9? It goes to 875 and then plops down. Well, I mean, this is good news, right? If it goes to 879 and plops down, it looks like 298, which to me is like the gap. So on the one hand, you know, maybe the idea of going to 13 sounds like really great. I think the gap's at like 291 or something. I don't remember. I'd have to look closely. But it's basically like that's the gap level. So if it only goes up to $8, then you may not expect it to go any further than 3. And there you have it. Potential for an LPS. You know. And honestly, looking at this in big picture mode, I don't think going to 9, I think it would kind of stink. Maybe short term, you'd be like, well, that's not very high. I wanted it to come a lot higher. But I think on the big picture, I think we'd probably look back on it and be very happy. We might maybe even happier with that. Because, and that's a hard thing to, that's a hard thing to do, right? It's like, oh, I'd rather sacrifice the short term for the long term. But like at the end of the day, does that make sense to come up there and reject? Sure. Would it fulfill what I've talked about here? No, like it wouldn't. You wouldn't have checked this creek. You wouldn't have checked the waveform. You wouldn't have made it. There's a lot of incompletes here. You wouldn't have finished the PNF. However, one thing that you would do is potentially save yourself from a really deep dive, because in theory, if it can come up here and then distribute across 875 and come low, it doesn't need to go below that gap. And so you might get a reaction here that's decently strong, but then you probably don't need to go significantly lower. It's not going to be like massive differences, but you know, you get what I'm saying? Like that could end up being really good long term, because technically that's like a higher low right here. So that would be really positive. You know, if I were looking at this from a helicopter view and I was saying like, well, what do I think all this stuff is? I'd probably be looking at it in terms of like that idea of cat ears, and then whether or not this makes a new low. If it makes a higher low here and it creates an LPS and it starts building out and it jumps that creek, that's a lot stronger in some ways. That could be a very, very, very strong bottom. Much easier to read, much less volatility in terms of the end. And ultimately, like, it could end up being better. You know, we've seen this kind of stuff happen once in a blue moon on AMC. It doesn't happen very often. When it does happen, it's really strong. Really strong, because it's, instead of making that low here and dipping down for a spring, it's just done. It basically means there's not enough sellers to get there. So you're like, so what do I do? I don't know what to do. I can't tell you how to move your positions. What I would say is that if it hits this 8 mark or 9 mark, and you're making a lot of money, like, that's a decision time for you, and you can decide what you want to do. I'm not going to sit here and pretend like I have the answer. I do know that both are logical. One is kind of just telling you that there's an extension that's going to happen when and if it comes back down, that there would be a larger extension. I think that's the big picture here, is that like the extra move does give you the creek check. It does give you the completion of the wave. It does give you this phase B top. All of that's good stuff. But it also means that you're more likely to come make a spring bottom later. And I think that's just the nature of it. And if you look at a Wyckoff chart, you know, it's not that different. When you hit that auto reaction, then you hit that phase B top, the rest of it is just build out along a creek until it eventually comes to a new low and then breaks out, or it doesn't, right? And it's hard to know if it doesn't come up higher, if that's the phase B top, but usually there's an attempt that's made, and we just haven't made that attempt. So I'm personally like really feeling it today because we hit 220 on IWM. It broke out. It hit the low that I thought it was going to hit. I'm really excited to see like that move happen this week. It's happening on a Friday, which is kind of crazy, but usually that's a good sign if there can be a bullish price action on Friday that holds. You'll get continuation on Monday. Holding is key, meaning like it doesn't break back below that 218 mark. That's really important today. You don't want to see it slide back down beneath 218.50. That would just be like a big head fake. That wouldn't be very positive. But in terms of like this overall wave here, it looks really good. I'm really happy to see it moving this week. That's what I wanted. Better late than never, right? I'm kind of glad I'm on here on a green day and not a red day. That's always nice. I didn't purposely skip the red days, but that just so happened to be the case this week. Yeah, so I think if AMC does make a move to 450 today, that's the completion of that first wedge. Obviously, it's broken out. And frankly, again, remember, like, this is, yes, an arc going down, but ultimately, like, this guy, this big pink guy coming down here, it's almost like Pepto-Bismol color. This is like the big one, right? There's nothing beyond that. You're going to head back up toward these ice levels and start hopefully breaking those really quick. So when I look at this, I'm like very encouraged by this price action. And I think that as soon as you get this like pop here, I talked about inverted head and shoulder. It's a way to look at it. It's not the only way. But it helps to keep things kind of simple because a lot of people get they see the inverted head and shoulder a little bit easier than they see other things because it's just simple. And the idea being like you're catching levels as you're going up. And it's very easy to look at it and say, oh, it could just be really symmetrical. Well, yeah, it's possible. It also makes it easy for trajectories because it does the measurement for you. So if you're not like into grabbing trajectories left and right and figuring out where bottoms and junk are, remember that it does the trajectories basically for you. So essentially, if you're giving it the right amount of space, it should indicate you have roughly the same kind of length on the left shoulder as the right. That's not always exact, but it's usually pretty close. So this would give you an easy way of kind of like timing it out. This is going to look too slow until it hits here. And then this is where I would say maybe it changes a bit. There's probably going to be some chop. And then this will be like a last drop. And then it's going to like pop. So this would be like a chopping period here coming back up. Chop, 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 chop. All of these short positions get eradicated back up to 495. And I don't think it breaks that right away. And then it probably has a pretty nasty dip. And then you would get like a pop. And that would be your big buy-in moment. You'd see buying here, but it wouldn't be like, it would be like buy in, let it go, buy in, let it go, buy in, let it go, buy in, let it go. And then it would just drop pretty fast at the end. And this is your M cross, as you can visually see it. Just like this was the M cross here, this is happening again. Potentially, if it's like super bullish, like more hyper bullish, instead of waiting to jump this, it jumps it early. And that does happen sometimes where it goes ahead and gets back above here completely. It's very minor, but it's important to note like there is a slight difference because one is like elevated, the other's flat. That could be the case here. We could have a slightly elevated, which, you know, makes sense because you're pushing out, you're making a higher high, and then you're making, on the pullback, you're making a higher low than back here. So it's like aggressively more bullish. So if that's the case, sure. Maybe it's a little more like this. And then it breaks out. And this is where you get like a big rally. In November, it's a slow moving one. This isn't like the other where we thought it would take off like really fast next week. That's different. Just different, not necessarily completely wrong. Both are just taking off around the same time, which they're both breaking creeks on potentially on Monday. Okay, and this is what I had on the short term over here. If you were looking at the chart earlier and you're like, man, he's never going to get back to short term. That's all it was. It was just a head and shoulder. There really wasn't anything to it. I just did a measurement for the head and shoulder build out, and it basically suggested again what you're seeing visually here, that there should be a dip, and that is a mess, but it looks like it happened. So you would see like a dip here and then react back up, and it did dip. It didn't make the same low. It didn't go to 412. It went to 414. This is what I put on the chart yesterday, and then you would react, and you'd have to come back above 421, which is where we want to see it break. Yesterday we made like 3 attempted advances over 421, and none of them broke. So the rest of this is just garbledy-gook, me measuring it out. But basically I measured it out, and it suggested that you would get there Monday. This is very much the same chart. So not really any different. And even this other arc and stuff that I drew is pretty much the same. It's just tighter. So it's just another wave. Yeah. So I don't know what to tell you guys, except that there was a lot of trajectories here that seemed to suggest that it would accelerate into October 21st. And that's very different than what I drew here, which is that it doesn't take... So one of them is like it's getting up there essentially the week of the 21st. The other... It doesn't get up there until November 5th. So pretty different timing. Something popped. Yeah, I don't think we're going to 35. But you got to do what you got to do. I'm missing a T at the elections. I just put elections. Thanks. You think we could reach 20? No. You mean now? No. But I've not really changed my opinion on that. And I've been wrong before, so do your own DD and decide what you think is right, you know? I don't think we're going to go above 1350s or thereabouts, 1360s. So I'm not going to agree with someone who says we're going way higher. That's just not going to happen right now. I don't really need to give more reason than I've already given. I've put a lot into this, and I know you guys have too, but like, it is what it is. Like, I'm not going to be able to change my mind in like 2 minutes on a stream. I've looked at that $20 target. I've seen where people are getting it from. I don't agree with it. I don't agree that there's a massive push that continues through next year right now. But I totally get where people are coming from. There was a guy the other day who was making a comment about me charting in a vacuum. And like, I think what he's referring to is that if you have a final breakout rally on small caps, why do you think AMC doesn't just participate? And my only main argument about that is that historically it's been delayed. That's what happened in the past, and it's still being delayed. But also that there's a disconnect, I think, between what some people see as fractal terminology versus like waveform build out. Because like the waveform build out doesn't demand a return to the 30s or 40s right now. There's like nothing there. There's just nothing there. Like there is no, there's just, maybe like, I don't know, again, like maybe that's because the acceleration is going to happen like really fast and I'm looking at the wrong wave. I can't find good examples of a massive wave like the wave we're making where it comes back up early and then just blows past it, I guess. They've been very consistent, so it's hard. Another thing that's really hard is that we don't have a lot of examples of AMC being hyper bullish. It just doesn't exist. So as much as we want to use things like January and March or whatever, those are singular examples. That's not a huge pool, is it? It's only like 2 or 3 examples that we can have, and we can look at dozens and dozens of smaller bottoms, which is what I've done, to kind of understand as best I can what do I think they're trying to get. I don't think they're trying to get back to all-time highs right now. I think they're trying to just get back up to that creek check. Once we get there, we'll see. But I don't find any evidence beyond that there should be a significantly higher target. It's just a super, super huge wave. And it started in 2020 and we're in 2024. And I think it ends in 2026. And if I'm wrong, I'm wrong. There's nothing to sugarcoat it. But that's my conclusion. So I don't foresee this as a problem, and some people think it's a problem, but I don't see it as an issue. Like, all this gobbledygook is really just to say that there's possibility here of hitting certain highs and lows and not getting to the low lows, but there's a main kind of, here's the gist of it, and I know you can't really read it. My chart's like even worse than it was earlier. The gist of it is still like the waveform itself, like the fastest I can kind of get it up here is, I think it was like late 2025. And I still don't see it going until maybe January of next year. I don't see a kind of push up right now to the 30s and then pulling back and then pushing up again, right after. And it's just not my chart. So it stops short. I think it puts the cart before the horse. Like we're just missing a lot. Like, we're missing a lot of stuff on this wave. Even if you thought that this was the bottom, it's like there's no double bottom to speak of. Like, it's just kind of like hit. You think it's just going to keep going. All right, maybe. But it hasn't broken out of the downtrend. So, like, where is this assumption coming from that it's just going to go way up? Like, someone said a minute ago, 35. Like, okay. But that hasn't broken any. It hasn't broken any creeks with this move. Like, the problem with people, and I'm not saying it's you or anybody else, the person who was talking about it, it's just like when we look at this and you assume this or this, it doesn't make any sense. Like, it would have to be, if anything, it would have to be this lower portion in August, because for folks that are saying it's like January and we're going to have a June style move, or we're going to have a similar move, I just don't buy it. We didn't jump this creek. This is the comparable creek right here. These 2 yellow marks, and we're way off of it. It's up here at like 13. We haven't even hopped over it yet. January of 2021 did. It jumped the creek. So it's dependent on like what you think, and this is always going to be the case with like fractal stuff, is that you look at that and it's like, well, what do you think matters? What do you think is most important? And I don't believe that the bars pattern matters that much. The bars pattern in and of itself is empty. It's hollow. Like, it doesn't tell you predictions of the future. What tells you predictions of the future, in my opinion, is the wave analysis mixed with range analysis. If you can understand the wave and you can understand the range, then you should be able to make a pretty decent conclusion about what's likely and what's possible. What I see is a wave up here, like a giant auto reaction that came back to where we sold off from, starting in September on this massive range build out, which is what I think they did here, is they dropped through and they built out levels going down from, because it starts with a hook, for Pete's sake. It literally starts with a hook at the previous bottom, which is like 1060. We haven't even broken out of 1060 yet. That's completely different than what happened in January. In January, we had already broken out of that bottom, which began back here in 2020. Like, it's apples and oranges. It's not even the same. So, like, it just doesn't make sense. Like, the very first thing we did when we came down was we hooked at 11 And I thought we would go back to about 14. It was really just based on the angles and trajectories coming down. And ultimately, like, we didn't even get to 14. We got to like 11 something, you know, we got a little farther in extended hours, but all we really did was a massive auto reaction. And to me, it just looks like they built out a range from September, walked it down all the way to April 2024. Then you had a big auto reaction all the way back up. And now we're just settling down, and we're going to see if we have another reaction, a secondary reaction. And that's the one that usually becomes a phase B top. There are circumstances where it can S-curve, but even if you thought this was an S-curve, the 50-50 from the bottom is like not very high. You know, it only comes up to like, the simplest way of looking at this would be like, oh, it's going to come back up to 10, and maybe it doesn't go higher than 1060. Like, that's the S-curve. So I'm really kind of lost with the comparisons that some folks make about this 2020 model, like as if it's sensible. And when I look at this like big picture, I'm like, it's just anchoring itself on those same trends that it built itself on in 2020. I'm not really seeing any difference. We even like kind of pushed up and parked in the middle, right, like we did here. I just don't personally see it as we've already had this and we're going to have another one and then another one and then another one. Like, I think it needs to build out and then it can break out later, maybe next year. And I still think it's going to be a while. It'd be end of next year, going into February of 2026. I think that February is where the end of that wave, the big wave, really is. You guys already know this. We talked about it a lot, but this is what I think of as the wave. Like, I don't think of it as a small thing. It's huge. It's humongous. So when I can't really abide. I just can't sit in the idea that we're going to go to 20 right now, because we haven't even broken out. Like, not right now. Like, I think we could go there later, but we haven't even broken out of this area yet. And this is a range. So, like, all we've done is auto-reacted in the range. It's a huge range. We would have to break out at the top of the range, then we could go to 20. But are we really going to do that, leaving a gap behind, leaving that liquidity behind down low? Personally, I think the answer is no. Other people disagree. So, anyways. So right now, keeping it as simple as possible, this is where it starts, you know? Like, it may seem irrelevant right now, it may seem like there's no hope, whatever people are trying to peddle, I don't really care. Because I've heard the comments in the last week in my absence, and there's been a lot of kind of mixed bag comments here. I don't think this is bad at all. I think it's getting ready to break, or it has broken. I think it's about to start walking its way back out of here. And it's going to start kind of boring. Like, it's not going to necessarily look like what it did in May, where it just takes off. There's an assumption there as well. Like, it's just going to take off and bleed up and go 100% a day. I don't know, man. I think this is very structured. It's built out. It's not impossible that it goes that fast. But I think it's going to have like the more traditional build out. And I really do. I think it's going to be a little bit slower. You're going to get those buy-ins. You're going to get the wave out. And I think it's going to take some time. Maybe it doesn't take this long. Maybe it doesn't take all of October, but we'll see. That's where I'm at right now with this. Like, I'm at a point where I'm like, yeah, I think it's going to go, but it's not going to be like you blink and it's up 100% like it was last time. And then in addition to that, I believe that there's oh, look at that. This camped right along that trend too. There's a macro build out here that we have to consider, and it's very important. Yeah, this one looks pretty sweet. I didn't notice that until just now. So that line I drew as the creek is a parallel. It's one of the parallels on this massive down channel that started in 2020. Yeah, Now I see it. Mm-hmm. Looks good. Yeah. Yeah, slower breakout is healthier for the most part. Usually you don't get as much of that giant sell down. I'm going to get rid of these guys. They're kind of cluttering the chart. They were measurements to see if there were strong intersections, and there are, but it's kind of redundant, I guess is the word at this point. It's kind of redundant. Like I already have the information and it's the same information. So I'm going to get rid of redundant stuff here. Yeah, that's interesting. Yeah, this makes sense. There should be a mini M right here crossing this guy. So this is probably pretty close. It may be a little bit faster than the way I drew it, but it's pretty close to being right. Why, what it's supposed to be. Let me get rid of this. It's kind of like another extra. So if we break out now, what is the top price range you see from your TA8? 1350s. But you're gonna stop here. There's been a consistent number that's come up as kind of a midway. It's not even half. It's more than half, but it's this potential rejection at $8 and $9. That has not changed. So like there's definitely a spot right here around the 850s, 860s where you have a pretty strong chance that it could stop a little short. I think it's a weird, it's not it can't be a coincidence, I guess. This is a coincidence being, something that, it just happened to be that way. It's almost every time I've done the measurements, it seems like there's a possibility that we don't get to the top. But there's a lot of measurements that kind of build out to this $8 to $10 range, I would even suggest. And it makes sense because if you think about it, it would make sense that would be an area of potential stopping point because the chart, when it built out this gigantic range, spent a little bit of time really early on working around that marker. I mean, it's very clear and evident that that's a support and resistance marker at like 890. So I don't think it's that weird to think that, it's coming up as a target. It's probably coming up as a target because it is a target. I think the bigger question is, do we get to go higher than that? That's the question that we really want to know. And the answer is we'll see. I think there's a strong enough chance at this point that I'm going to keep talking about it, that we could see, past 13. But I don't want to make it seem like it's impossible that it stops earlier. That would be irresponsible of me to sit here and say, it's definitely going to go to 13. I mean, frankly, the point and figures have it going even higher. But there's certainly like a consistency in saying, well, it goes to 875. It could change the dynamic of it a bit, but it's actually pretty similar, to some of the other things we talked about as well. So a lot of these are just lining up so perfectly, it kind of hurts my brain. I'll come back later this weekend. I'll try to clean this up. I think that when we get to maybe mid next week, probably going to have a good idea of whether it's taking an accelerated path or not. right now I'm a bit indifferent about it. Like I don't really care that much because most of my stuff is for January anyways. So I'm just waiting for the move regardless. But some folks, I get it. You're going to be like pretty anxious about it and wondering if it's going to, break next week. I'm not sitting here playing short-term contracts or anything. So I don't have that kind of risk factor. We need to get above a few of these targets first. So first confirmation is definitely 420s. We're still struggling with that. Then it would be up here around the 450 mark, finding out a base here and getting back above 460. And I think that's the most important one for now. And from there, we could take it in stride. So we could look at the next levels up. Ultimately, yeah, you're going to come back up. I think 520, it's not really 520. It's more like 511, 514. That was where it topped off over here. That's going to be one of the most critical levels, I believe, because it's that cat ear top. It's that wave top here. And then likewise, the next wave top is at 575. So you've got a couple of really important critical markers that are coming up soon. You start breaking out, you should start seeing those work themselves out. So I'm cleaning it up slowly but surely. Yeah, but this is good news. The small caps starting to rally a bit. We'll see if they can hold a rally. Just like anything, you look at the middle M cross, you look at that rise, that's going to be the early target for this. And we'll go from there. So I think there's a decent chance this could run up to 222, and then you're going to see if it can break 222. So if it can break 222, it might be in a good space to continue forward. And if not, then yeah, I mean, it could be like a larger wave, 1, 2, 3, Why do I think they move together? Because they have the same operators, like your Vanguard and BlackRock operators. That's why they move together. I think it's the same reason that we see a stock like MPW making certain moves as well. Like, it seems like it moves with them at times as well, and it doesn't make any sense. It's a small cap ETFs and stuff. They're buying up the same stocks, and then they're playing them very similar ways. So there's a lot of theory about things called sympathy moves and all the meme stocks that were in the basket with GME. And all I could say about that is, yeah, that's true. And I think in the beginning there were a lot that were similar, and then there's been winners and losers. Some that maybe went into long-term accumulation mode where they started driving the price low so they could buy more, and others went into long-term distribution where they may have stayed up higher a bit longer, but then they died, and then they're still dying, And I don't think that that's different than what we're talking about here. I think we've got the same idea. We're basically talking about certain large hedge funds buying and selling buying and trading and essentially manipulating, the same stocks that they were 2 or 3 years ago. One of the first things I learned when I started doing any kind of Wyckoff was that the scale of it is pretty phenomenal. If you look at the theory behind it, it's this idea that really they're trading like 3 to 5 year plans. It's never what you think it is. Like, we always think it's like they're going to make big money on these big drops and this and that. But those are things that have been worked out over like 10 months to 11 months, or big run-ups over 10 months to 11 months. I mean, a lot of stuff like that is planned over a long period of time. And when you look at the big picture, looking at it as a 3 to 5 year plan, meaning like could be on an election cycle or something like that, makes it a lot more sensible. You start seeing like the big picture. And that's how institutions trade. So that big money that goes through the market is injecting it where it needs to, but it's not trading in the 10-minute time frame. It's not one move is the move. It's like they're all little pieces of the same puzzle for the bigger moves. So when I look at AMC and GME, I see the similarities there, but I see some really major differences too. And there's a lot of people that think that AMC, you overcomplicate it when you say, oh, you're doing TA on AMC. Why even bother do TA on AMC? I hear that all the time. It only runs when GME runs. I've heard that at least 3 or 4 times since I started streaming from different people. And all I can say is that, yeah, that's kind of true. But at the same time, like, why not? Why not do TA on both and come up with what makes sense as a combination? And then at the same time as that, I'm also sitting here saying, yeah, they run together, but they also don't. That's a paradox. That's a what does that make? Doesn't make any sense. Yeah, it does, because they do run together, but they also don't. Like, there are plenty of times where AMC, like recently, AMC held its held its highs for a really long time. It didn't break low early, and GME did. And it was like, at the end of the day, they both interacted with it's funny because they interacted with a lot of their targets in the same time frame, but they did it with wildly different moves. And so, yeah, there's a similarity in terms of like when they sync up. They seem to sync up at really important moments, but they're not trading like 1-to-1. And I think that's the nature of just the market having different people in different stocks, and then some of those people are the same. Some of those larger institutional trades are the same. So I don't know. Is there a good reason for it? Probably not. But I think maybe when the whole meme stock saga started in 2020, I think that probably defined a lot for a lot of institutional players who started trading these certain small caps together because they saw like a massive amount of retail involvement. They love having a lot of retail money to screw with. That's a huge plus. That's what institutions look for. There's a lot of retail involvement. So when I look at everything that happened, I'm like, yeah, it kind of makes sense that they would trade them all. They saw an opportunity, and they took it. I don't know, man. We're in a day and age where people don't know what to believe, and everybody believes whatever they want to believe. And you can have completely uninformed decisions and opinions that get publicized as truth, and this is where we are, So just be careful what you digest, I guess. Like, I'm of the mindset that there's enough mystery in the world. I don't need to solve every single mystery. And I don't think GME and AMC necessarily one follows the other. I think they're just moving together. The idea of following like it's some kind of mercy, like, oh, well, sorry, here's some leftovers, AMC, from our feast over at GME. That's just kind of like arrogance. And it also doesn't make any sense. Like, okay, well, if your Vanguard institution owns both majority shares in this and this or whatever, like, of course they're going to look similar when they move together, but it's not because one is following the other. It's because they're both following some larger institutional operator trading. That's a very different conclusion, isn't it? Do you think that AMC is a slave to GME, or are they both slaves to the master operators? So there's a sense of kind of like arrogance in that argument of like AMC versus GME and like which is following which and blah. I mean, I don't know. That seems kind of silly. Do I think that they often move together? Yes. Do I think that they're kind of linked because of who trades them? Yeah. But because of retail involvement, of course. That's a simple enough thing to say. That's totally true. But I can believe that without also believing that one is following another, like it's dependent on the other. That's silly. That's kind of dumb. That's like somebody sitting on the bus next to you, and then they look at you and they say, "Why are you following me?" And you're like, "Because we're on the same bus." What do you mean, why am I following you? We're in the same car. What do you mean, why am I following? I'm not following you. The driver is the one driving us. We just happen to be in the same bus. Did AMC follow GME onto the bus? Maybe. But that's a completely different question. They're inextricably linked at this point. Like, you can't just separate the two. And I think you can't separate them with some others as well in that basket. But are they all following GME? Is GME the one driving the bus? That's a question that I can't answer. I mean, that's a question of like whether you think retail's really the one in charge. And I think people are really waking up to the idea that no, they're not really. And I don't know if people still believe that the MOAS is again GME only kind of thing. It's driven by GME shareholders, all that stuff. Look, in the beginning, it absolutely was. I don't think there's anybody who would argue that. To some degree, it absolutely was. But at this point, there's so much institutional involvement, and there's been such little change affected to the way the market works. There's just 0% chance that anyone's being caught off guard at this point. So, have you looked at SHIB? No, I haven't looked at it yet. I don't really look at Shiba Inu very much anyways, but I can try real quick. I know that we were watching, sorry, I was trying to pull up my thing here. We were watching Doge for a bit, and it was doing okay. It had broken out above 10 or 11. It came back down to retest that creek, and it's fine. It's totally normal. It's a wave push, and then it's coming back to check, and we'll see if it holds. So I would imagine that without looking into it too much, that there's probably a similar, let's just look at the Coinbase one. It doesn't really matter. There's probably a similar setup on SHIB. If crypto's doing well, right, or about to take off, then you would expect there to be some similarities. Well, I mean, I'm looking at SHIB USD. This chart looks pretty flat. It really looks like it's distributing above whatever this number is, kind of where it's at right now. Let me check another one. Let me check the one on like Binance or whatever it's called. See if it's any different. It's about the same. Okay. Yeah, I mean, it's okay. I don't know. It's kind of just sitting in the middle right now. It looks like it's already had that peak low, so it looks like it might be trying to go high soon. So I would expect if it rallies, it may rally up to potentially like a wedge kind of motion here. I'm not a big fan of every crypto under the crypto umbrella, but maybe it may rally up here because it's kind of done the low wave and it looks like about right. It may have that push here that goes up, but I can't really judge this very well because like long term, the goal may have been to move SHIB down. Through here, through this wave. So yeah, so this could be a reaction. Bitcoin. Yeah, I've thought about it. I'm just not a big crypto trader. I own it. I own a lot of crypto here and there, but I don't have a consistent trading pattern with them. So I don't know, man. Maybe it doesn't look as strong as Doge to me. It looks a little weaker. Basically, the daily RSI is pretty high, and it just recently got really overbought. I'm trying to look back and see if there's examples where it got overbought, retreated, and then went again. This is one back here. And this one, I guess, kind of did the same thing. So it could have another leg up in it, but I don't know if I would go much beyond that right now. I feel like they're trying to keep it here below whatever this 24 is. You see that? You can see that distribution here, and then that early breakdown when it first was created. So it's at the top of a channel, essentially. And the bottom of that channel could be very, very low. So we'll see. It just sort of depends on whether it can get that swing up above or not. I didn't look at WTO today. I haven't checked it. Someone said it got pretty green for a minute. I really haven't been looking at this very closely the last week or so. It's like negative 0.4%. Mostly because when it like lopped off that wave, I just kind of figured it was either dead or going to take a while, and it's been proving me, unfortunately, it's been proving my brain right, my assumption right. There's just not a lot going on here. Do I think this is a potentially good penny stock trade? Maybe. You know, it's a hard one to judge. But one thing that really bugs me about this is it's been ridiculously oversold at times while it's been coming down, and then it just barely stays overbought, and then it drops. And it gets overbought really fast. So outside of like a squeeze, like an actual squeeze kind of motion, I just don't know what's going on with the sellers. Like they don't seem to want to. It's like too jumpy. If that makes sense. Like there's too much people that are like getting out as soon as it hits overbought. They're like, all right, we're done. You know, and that's odd to me. So when you look at it like that, and then you look at this current setup, it's like, sure, it looks like it could be breaking out, but it's easy enough to look at this and be kind of skeptical. Like it's already at 57 on the 30-minute. If it pops to 44, are we going to get overbought? And then are we going to like dump? I don't know. I don't want that to happen, but I'm just saying like it's just the way it is kind of odd. So I thought this could be like a shallow S-curve motion here on this first heel, but that didn't end up panning out. Instead, it's iterated again, and it's just doing the same exact thing it did over here, but it's doing it like sideways and outward. So really just waiting for that to kind of finish, and I've kind of maintained this for a little bit, but I think it's the same story. I think if it can get back above 55 cents, it might be in good shape for a rally all the way back up pretty high. It could have a really big push. But until that point, I'm just seeing this as like kind of a hook. I'm just like missing the Ornado reaction with like a weakness after. It just hasn't been able to make traction. And this is where that 65 cent level right here is where the offering was. So they did an offering right here at 65 cent for some reason. I don't know why they did that right after they did a split, but they did. At least that's what the news is. So it seemed like a really bizarre move to me to do that right there, but that's what they did. So I don't know. It keeps walking across creeks and then like just leaves them. So it walks across them and then just kind of ekes out the rest of the way. And I don't know. Right now, I just don't feel there's a lot of strength here. So the lower, you can see the lower wave, real low, didn't complete in the same time here. If it did come back, it could come back and only hit like 55 cents if it did it way over here in October. So, and then that would be that, oh, it's made the wave, it's done. So there's still just a lot of questions in my mind about potential here. I will say this, looking today at it, I'm just kind of simplifying my chart right now. Looking today at it, there seems to be a pretty good chance it's going to test here. This is a 30-minute EMA, which it hasn't tested. I think it's 180. And it's right at that cat ear mark. That's always important. So it is testing an important creek right now. It could very well be a very different stock next week. If it can pass above this, it could have some serious strength moving up. But there's still a lot of levels to kind of climb back through, so that's where I'm at with that. Okay, so if you're following MPW for a while, you probably are like, what the heck, dude? It went really low. Yeah, it did. Here's where we went wrong, okay? So up here, right on October 4th, it kind of poked its little head out. And maybe the irony of this is that we had talked about October 4th and 7th as being kind of the end of a waveform for AMC, and it ends up being this important marker for MPW as well, because it ends up being this little head fake. So it poked its little head above the top resistance, and I didn't like it. I didn't think that was a very good thing. It was the end of the day. And then, of course, Monday it just sells back through. This is essentially like a wedge, so it comes back down. And the wedge breakdown target wasn't like super low, but this is like a falling wedge. The wedge breakdown target was somewhere around like 490 or something, which is close to where it came to, but it was, I feel like it was a little higher than that. It was like 508. And then there was a secondary target down here at like 490 or something. The 488 gap fill happened already. Like that's done. So it hit that low. Right now I'm looking at an intersection of really important trends. So there's a trend coming down that's just a parallel here to the trend that it tried to break out of. That's pretty typical. And then there's another one, which is the creek coming through here, these two tops. Yes, that was always possible. We talked about the possibility of it coming back down to get that gap fill and maybe hitting this creek. What couldn't happen was it couldn't successfully get down there without breaking the other, and it did break the other, which is the higher pink line right here. So there is a problem with the chart right now in that it did break one of the resistances, and unfortunately that's that. So I looked at the big picture and I did a Fibonacci retracement on it, and the retracement to the quote unquote golden pocket level is here around 477 to 469. I also looked at, again, this trend, and I'm like, maybe this trend is being tested as well. If it is, doesn't really look like it's holding very strong, kind of pushed through all these coming down. So I don't know, man. Right now I kind of feel like maybe like AMC, they're kind of biding time to earnings and elections to decide what they're going to do. Does this drastically change anything? Is probably the question some folks will ask. I looked at this yesterday, and I think my answer was no, but there's a problem right now with the fact that it did come down that low in and of itself could be fine if it got there at the right time. And it got there late enough that it didn't break everything to smithereens. However, when you look at the widening, there's not really a great way to put this, except that it looks to me like it kind of melted back into the widening. So I don't have a lot of positive to say about that. I can't say that's a good thing. It did not hold here high, which is, again, it is what it is. And instead it dropped low, sold off. But when that happened, I think it potentially bled back into that widening trend. So this would be like a push of that resistance, that big widening downtrend from like the last 3 years or whatever on this chart. Push back into that. I think the sellers are just, frankly, I think they're just panicky. And I've talked about why. This stock has like a ridiculously high short interest. And I think at this point it's safe to assume in my book that they were not happy with this move on the whole. Some of them will see it as an opportunity to drive the price down in a distribution. And that's what I don't want to have happen. So I'm kind of carefully waiting to see if it manages to hold here. I think as long as it holds in this little region, there's not really any reason to be worried. If it dropped below here, I would be a bit concerned, because at some point you're beyond, I'm gonna say beyond saving, but at some point, yeah, it's kind of gone beyond that threshold, and you're essentially like breaking down, and this becomes like a giant double top. It doesn't make a lot of sense to me for other reasons, but I'm not going to get into that right now. Point is that sure, like this could be like like we talked about, like an auto reaction and a phase B top, and then you could have a really long, boring phase B after that if it doesn't immediately advance. My biggest consolation here was that it was advancing. Like it jumped over. It did what it needed to do, and it didn't break down here, and it jumped over, and it seemed to have held. So all things considered, if this has a strong reaction, it's very similar to what happened on this drop here in June in terms of the way this broke down. It's really similar. So if it has a strong reaction, this could come all the way back up to like 590. It could be a really good swing play, but it has to first kind of break out on that bottom. So this happened back here. There's a similar push up and then a distributive action that brought it low. And then when it reversed, it came all the way back up to the place it dropped off the cliff from on the first hook, which for us is up here around 590. So it's definitely a possibility we could see something fairly similar to that on MPW. So I'm just kind of waiting to see where it stops. So what I'm saying is that this wouldn't necessarily be fast, but we could see it kind of build back out to 590. And maybe this is like, in some ways, it's similar to AMC and GME. This could be the build out into November elections kind of thing. I want to say that earnings has been kind of a mixed bag. It's been mostly positive, but only like for a temporary time. Like it's been a catalyst, I guess the last 3 times. It's been a decent catalyst. And that's coming up, but it also was super delayed the last time. I think it took an extra like week or two. So I wouldn't necessarily trust this value here. Yeah, so it could be in for it if the operators don't step in, and take it back up. So we will see. Yeah, and then I moved some of those intersections out to the election, and I looked at where those would be at the election instead of on October 7th. So I was saying, like, remember how I said if you pull it back, that October 7th works? Well, I decided also I should push it forward, and some of those intersections seem right to me. Like this one seems really close to right around earnings, between earnings and it's like right here. Between earnings and elections, there was a lot going on in that pocket. That also seems right when you look back at this move. So a lot of times with the M shapes, they make the same move out because it's like a wave down and then wave back up. So like the wave down often ends up being similar to the wave up. It just depends on where it takes off from. So like here's an example of one right here locally. I don't know if this is going to work. I'm just going to do it because it's usually about right. It's not perfect. It's usually about right. So where it took off from, it's pretty close. So sometimes that's a good way of understanding like wave up, like wave down, wave back up. And again, typically pretty even paced, depending on how you do it, if you do it right, measure-wise. So when I look at this as like a compression of crossings, this would be the smallest two right here. These would be the next largest two. This is the one I said I was most worried about having a bigger pullback because of, reasons. Because the wave up and down here is pretty big. I thought it could be pretty big right here. And then the rest of it would be this kind of reactive move down. So you would have this down and then potentially this up. So in theory, even if it came down to that 468 level, and it's not impossible, this could still have a 785 breakout. So it's starting to look to me like a strong possibility that that's what happens over here. And I had moved that out and checked it out. So that's what I was looking at for MPW. Otherwise, nothing really to say about it. It kind of like made the drop. It was right on target when it made the drop. Kind of went right to where it needed to go. It was just a straight shot. Beyond that, it's a mixed bag, Like I think it's going to try to push low here, maybe try to get a double bottom. Unfortunately, that's like a throwback, which typically to me is like it's kind of a twofold thing. On the one hand, it's like your operators can get back in if they want to and just buy from the same level again. On the other hand, it's not always a great thing because sometimes it's because of the throwback is because of a lot of selling and or shorts re-entering, and so it can affect price targets going forward, and it does. So if you look at Bukowski patterns, a lot of times that throwback causes problems. BIOR. BIOR. Oh, therapeutics. This is going to be a good one. Sorry, you didn't understand I was being sarcastic. You're like, that's not funny. I know. It's not funny. I'm sorry. All right. Well, anything like therapeutics or like medical in terms of like pharmaceuticals and stuff, I always gotta not roll my eyes, but I'm like kind of raise my eyebrows. Like this could be a bad one, especially if it doesn't have consistent volume. Yeah, I mean it's in a distribution right now. Still, it's still marking down. You can see the distribution here in this push, and the drop and the massive volume coming off of, I guess that was about $1 to drop it beneath $1. You don't have to say sorry. I'm just looking. Is this like a young chart, or is this just like... It's not loading for some reason. Pretty young chart. Okay, well, I mean, if you were just trading off of bottoms, then you'd probably look at the pattern of this kind of 1, 2, 3 push. There seems to be a lot of time sometimes that can be spent low. So certainly this could be a strong reaction. It looks a little bit like a double bottom on price. The RSI came lower here, which is a different kind. I think that's a hidden divergence. If the RSI goes a little lower but the price stays higher, it's not to do with tops, it only has to do with bottoms. You can see the symmetry in the 1, 2, 3, and then the big push, and then the 1, 2, 3, 4. It's a 4 top right there. So it's a bit of a cat ear. Cost is doing good. Well, that's good. I haven't looked at cost in a while. It may not be all is lost kind of thing here. It depends on when you got in. Let's see. I'm not going to study the fundamentals of this, so you'd have to kind of do your own DD on the fundamentals, because if it's got a fundamental problem, you need to know before you invest. Like if there's a serious fundamental issue, it could mean that it's not going anywhere but down, you know, like in some ways. So this is your trend here locally, and then yeah, I think it's about the same. I mean, it's not the prettiest chart, so there's certainly a possibility it could come down pretty far. So here's maybe the problem, is there seemed to be a bit of a buy-in here. You can see that the RSI is coming back up, and then the price is coming down. But the problem is that the RSI on the sell-off just kind of resets it all. You lose that nice steady divergence going into that bottom. So I don't know. It's kind of a bummer, but that's what happened here. Still, I like the way this kind of built out and then dropped low and bounced. I'm going to flip this chart upside down, because sometimes that helps me to visualize better. I think it's not impossible that this has already done a spring. Like this could be it, this little dip. Normally I gotta caution because the nature of a spring is typically like to hit a phase B bottom and then go up and then come back down. So that's my concern, but it's not impossible that that's hit a spring already. So instead of doing that and worrying about a spring, I'd probably just worry about maybe this. This is probably looking like where it's going to try to... It just happens to be triangulating, but whatever. Yeah, I'd be looking at this guy. So there's a really steep creek. I'm thinking this isn't much of a good buy until over 60 cents again. If you got above 60 cents here, there's potential for a gap fill at 64, and then it could run up back to the top. This is a best I can do, like a wave cross right here. So this would be like the potential there is that that's the low of the wave on the bottom, potentially. Penny stocks are weird. It's not like that they're inherently bad or something. It's just a lot of times they are harder to kind of analyze because their data is not, feels like incomplete or something. There's hints here of recovery. But it's pretty far. It still hasn't made a break, so yeah. I mean, to me, it doesn't seem like it's worth it to invest in it if you're not invested already until maybe here at like 66 cents, because that would be above this drop. And ultimately, I think if it can get above that level, it's got a good chance of going up to fill in that gap. So the gap's like right here, like $1, $1.08 or something like that. Maybe. Yeah, maybe trying to set up for a similar move going into January, like coming back up here. It'd be a big deal if it went from whatever low it's at now and it rocketed up. If it made this jump, I would imagine this is what it would look like. It certainly would be a big deal. That's about as much as I can give you. That's a bit of hopium too. You got to understand that like the way that a penny stock travels is questionable. Yeah, if this wave completes, then you would see a break here of this marker, and then potentially goes all the way up. It would have some kind of an interaction here. Should come back above that, and then it would take off. So it's weird because it's like the confirmation is like way up here at like 50%. It seems higher than it should be, but that's where it is. So you'd have to just trust your gut and trading like a bottom, and I don't really like that. Because this could distribute through the floor here at 470, and then it just changes everything. Not 470, but 47 cents. It just kind of changes everything. if it passes below there. So yep, because that could take a really long time to come back. Honestly, it's been a long time since I looked at costs. I think that everyone was expecting there to be a similarity in these two when it got to AMC moving at the same time, and then we saw this push out. Funny enough, it did the July move. That's not funny to me, but whatever. I mean, it is funny, but it's not, right? You're like, what July move? Remember when we came up in July and I said, like, it could break out on like July 8th or something like that? This looks like that broke out, so. Man, I don't know. I don't know how to read this chart right this second. I guess you could just take it for what it is. My thought is this breakdown will probably be retested. Just glancing at it, I think this will try to come back up and probably try to do this. But I'm going to guess right now it's probably done. I remember 19 or 20 being like that high target. I'm trying to remember what it was. Was it like $19 or something? I remember that being like the extension. I wasn't sure it was going to get there, and it ended up going really high. Okay, let me not fudge that. Hold on. I'm going to snap it instead of what I just did. Still think I'm getting the snaps wrong. I don't know. It seems right. It seems wrong. Whatever. Yeah, maybe. So there's a chance that if this can react well, it's kind of like AMC, to be honest, right now. It's got like a potential for a phase B top that comes up a bit higher than the previous one. And then there's also this kind of 50% potential where it just kind of hits that and just sort of bonks its head and then just goes back. So there's no one size fits all here. What I would probably do is just watch the, and I mean, I hate to say it because it's very similar to AMC and it just feels like I'm copying my same chart, but it really isn't on purpose. Yeah, it looks like it's trying to like break out right now. Maybe. And if it gets there, that's good. If it pushes this little marker. But there's other creeks here that are a bit higher up that I think you shouldn't ignore. So I'm kind of creating all these massive lines. One of them's like right there. And I think that one's important, so I wouldn't ignore that. That would be one I would watch carefully in the days to come. So I think probably what most folks are looking at is they're looking at this really slight, and it's important, it did jump there. It sort of jumped over right here. So it definitely looks like it could take off any second. So I'm thinking this is going to act as kind of like a 50-50 swing to the top. 1 and then 2. And then we'll see what happens after that. And it looks like that might be going up into earnings, perhaps. Like a run up into earnings here. So there's a good chance it's going to run like 60%. I mean, it's a big move. It's definitely possible. And then I don't know about the rest of it. I feel like kind of indifferent, but it looks the same or similar to AMC. It could make another rally, but if it fails, it would come really far down. Probably come back down to fill this gap here. 460. Genuinely, it could be that fast too. It just depends. Yeah, I never checked this as support. It did check this lower 387 as support, but it never checked this guy on the breakdown. It just broke out on the left. So it does look like it could have a pretty decent 60% rally in it, maybe even more. But then I think from that point forward, I don't know, man, it's kind of dangerous. Yeah, that's the way they built it out too. They built it as like a halfway point. So this would be like a distribution. See that? See that drop off at 932? So it was almost like they were attempting to get down. They were like, oh, we're going to go back down and check the floor. So we started going down. We broke down halfway and then it kind of got hung up. So one of the things that might be done is to push back up, reject off this rising wave that they broke already. And that would be a pushback up to like 11s. I don't know if you want to say it's cool, but it's kind of interesting about that is the gap downs like right there as well. And that was like those early hits. So this could be very easily seen as like distributive zone here to like sell off from. It's pretty straightforward, to be honest. Yeah, I don't see a lot of complication in that. It's really simple. So maybe a 50-50 around 9. If it's strong enough, it goes from 7 to like 12 or 11. And then after that, I think it comes back down to 6. It's a little backwards because this looks like it would potentially go very quickly. So I'm not sure. Another potential is that this is building out farther. So you just watch here, you'd watch and see if it holds strength above like 1055. I think if it comes down and it loses like 1050, it's probably going to crash. That's my thought. And then it would probably crash all the way down. I think if it holds, it may be fine. I may just continue back up and start rallying a little bit more, go back to the higher top even, perhaps later. It could be both, for all we know. One of the things we kind of talked about going into elections was the way it panned out in 2020. There was an interesting kind of turnaround where after it hit elections, it kind of rallied. Like right after, and then it tried to push down again. I wonder if this setup yields itself to something like that too. This is another potential bull trend right here, so this would have to break. Maybe it doesn't get to the gap on the first go, Which seems kind of fast. Maybe it just goes down to elections. I don't know, it's just hypothetical anyways. And then it does like a fancy pants breakdown. Comes even lower. I wonder if there was something else that wasn't checked thoroughly. 280s, 290s maybe? Yeah, maybe. 294. It's pretty similar to AMC too. It's weird. Oh yeah, look at that. I think there's a decent chance there this thing could go to 294. Guys, ride the wave till the wave is over, you know. Keep going if it keeps going, but that's pretty low. There's really no reason to doubt this kind of stuff at this point. We've all seen it happen. It happened on AMC. It took 3 years, but it happened. If it leaves these giant creeks unchecked, it's probably going to come back down there later, you know. I don't really need to qualify that. The only thing standing in the way is people's disbelief of, I'm on cost right now. And I don't think it's doing bad, but it doesn't look like it's going to necessarily go back above 12. I don't think that's a guarantee. This is absolutely like a sell-off level. It's built out to come back and check this creek at 12. But then if it holds, I think it could do another rally back up. You could see it rally back towards 20s, but if it doesn't hold, why? I mean, I'm looking at it right here on the weekly. I'm like, why would you necessarily expect this breakout to hold? I think this measure is a 50-50 right here. This is a 50% breakdown that was trying to get you back down to this gap level. You can't even see it on the weekly. It's on the daily. It's a pretty big gap down here. The breakaway gap back here in July. There's a 50% marker at 936 down to that gap. So there's no doubt in my mind that that's being considered. The earnings, usually you might see a pump into it. It seems like we got a pump into these other earnings. It does look like it's broken out here. So I think it pumps into earnings. But then beyond that, I think it's a debate. I think it pretty easily could sell back down. I'm not really seeing any reason why it has to keep going. If it jumps this creek and it SOS's, then yeah, it goes. But if it jumps this creek and then it distributes around $10.30, I think it's just going to dump right back through. And I think it's going to go low. And you're going to get an LSPY here, which will correlate to where this is. Probably to this trend as well. I'm sure there's a trend here. Yeah. And then that's where the LSPY would be anchored, which is the last point of supply. And that could happen on earnings where you get like a big earnings pop. So maybe you get close to that gap fill or near the gap fill, and then you get a big earning or elections pop, excuse me. There's still no guarantee that breaks out. And I guess the only situation where maybe both happens would have to be if this goes low. So this ends up being like a phase B top. This goes low and springs. And then I guess that could be like a rally here. So if it broke there. So there's like points of contention. But it's straightforward. But I think if it broke down after that, I think it's going to go all the way back to the bottom, 250. Yeah, or near the bottom. And I looked at the big picture because I was wondering, like, well, what's down here, you know? Like, why even come back? If you're going to come back down low, why come back to, 245 or 250? And there's I mean, honestly, this looks like a stronger case for it than anything else. If you go to the weekly, you can see that this is a push out. It's just like a double bottom basically, but it dipped below here. I don't know. It's tough. This is a big chart too. It's been around for a long time. Yeah, I don't know. It's a hard one. You try to apply the same things long term that you apply short term, but sometimes it's not that clear. I guess it's debatable. Personally, I'm looking at this RSI divergence here, and this was like the biggest. This was like the biggest opportunity this stock had. I mean, look at that. This is golden going into 2020. It started in 2014, though. I mean, it was a long term. That was a long term bottom. And then I'm looking at this now, and I'm thinking this level at 19. I don't know, man. It's a little bit like GME, isn't it? It's just sold off like so bad. It's sold off above 15. I could look at it and try to say, oh, it's an SOS, but I'm not really sure I can make that case. This is a tough one. So we're saying that they may be selling off above 1150, which would make sense because that was like 2006 all-time highs. So your bears are thinking distribution above that mark here. Well, there's an argument to be made both ways. I take back what I said. That it's like really clear. I don't think it's really clear. This part right here is clear. Why is this acting as distribution? That's clear. Why is this acting as distribution? That's clear. You're retesting this top, so I would not put a whole lot of emphasis on anything unless it broke above like 1150 and then 15. There's just very little evidence that you're gonna because this has to be a breakout, right? And so when you look at the big picture, it's easy enough to see why it won't do that now. There's a lot going on into that you could probably argue, like, I don't think it's going to do that. They could come back, try to find a bottom. Whether it comes back this low seems a little crazy. That's like a big swing. But it did not really check this creek coming out, and I think kind of like AMC and GME, we may see it go down into January before it comes back up. This is sort of what I have on AMC as well, is it never checked this low creek down here, guys, and then it's the same thing. It's like you could see how with GME, it's like avoided that low. You can see how that pump up and then that push back down completes the bottom, and then in January, basically right here, this is January of 2025. That could be where it really takes off. I kind of see the same thing on costs here, potentially. This is early January, coming back down. So it's sort of the same exact chart, like a phase B top here, or even just a second push up could walk you back down in a more distributive pattern. But we have the same exact problem, which is you don't really know for sure if it's going to hit a new low. Technically, if it came and hit this creek on January 13th at $2.50, technically that's not a new low. It's technically an LPS. But I could say maybe, I think it's going to spring here in January, late January, and then react violently. And this is really where you get that massive. It seems redundant because you're like, well, we just did that. Why would you need to do it again? I mean, that's the question, right? Sort of order operations. Like, well, do you think that's it? Or do you think this is like a massive bottom? And so it's the difference between saying like, I think it's like this, where it's walking out and then it's about to have its big move up, versus saying, I think it's actually like this kind of hyperbolic bottom. It's just happening really rapidly here. You're getting like a massive bounce out. So I would suggest that the other place that it maybe stops is right here at 464. So there's another possibility there. If it didn't go down that low, you could stop at 464 and advance. Both would be fine. And I think either of those would make sense to me. But if you were going to go and you're really going to break out here and do the fullest of moves, what did we say? Near like end of the year 2025? Yeah, this is that wave. It's the same thing. Although this one, interestingly, kind of looks like it was met already. That's pretty fascinating, isn't it? So this already kind of returned back to the wave. So maybe it's different than AMC. Maybe it just extends back up. Maybe you get that push out instead of going back low. I mean, I don't like it to be perfectly symmetrical, but this did kind of wrap down through it. So if you have a similar motion right now, it could be very similar where it doesn't have to go super low and then it comes back up. And instead it extends beyond by about that much. Sure. Possibilities. You can kind of see how that might reach it up to that high level. So there's a lot going on here. We just have to wait. It sounds like, you're just throwing spaghetti at the wall. It's kind of like every possibility. Yeah, I know, but we wouldn't be able to tell until up here. So there's nothing to say. This to me looks fairly bullish. Like I would expect it to come back. I would expect it to come back up here to this top again, maybe one more time, and then from that point forward, you just kind of take it step by step. Because obviously, if this distributes here, it changes this. Like this is no longer on the table. It's not that difficult. And then same thing here. So it's really like two main pivot points here and here, and that's it. The rest of it's then those outcomes. So it's pretty straightforward. Yeah, I would have to spend a lot more time on this chart to really get a better picture of it. I don't think I got the fullest picture, but I did what I could. Excuse me. All right. I think that's it for now. Just really don't want to see IWM come back below 218. If we can hold this breakout, I think we're in a really good space Monday. I wouldn't say I'm like surprised by AMC not going up, but the day's half over. We'll see what happens. I wouldn't mind it just sitting still. It looks a little weak to me, like it hasn't committed. Yeah. It's checking the top and the bottom here, and now it's trying to make a decision. if I was wrong about the first arc, I don't think I'm wrong about the second, which would mean it's like right here. So I did 2 different ones today. One was a little shallower. That's this early break. This one's a little different. So if it pushes out end of the day, I just want to make sure it gets up to a comfortable place and it's not just a straight up move on Friday. I don't like that kind of stuff. Unless we're going to gap up Monday, it's usually garbage for us. So we're going to focus on hopefully staying in a good spot into the end of the day today, breaking out here maybe. I wouldn't mind being up around 4:30 or so, even if it didn't quite get to 4:50. We'll just see. You get the idea. If you're wondering if this is like wildly different from other stuff, I know we talked about a lot today. It's not really that different. This orange path was the path I drew like last week. It's just lower than expected, but it's still in a good spot potentially. I don't think it's beyond us to drop down to 4 again. So if it ended at 4, I'm also not going to cry tears. I'm just going to be like, whatever, you know. We'll catch it up next week. I'm going to get going. I got a lot to do today. But we will catch up with you guys on Monday. Thanks for coming out. And I will talk to y'all later.